Stream today. I'm gonna get this stream going right this very second. It is restarting over and over and over and over and over again. I guess I should post this here link on that there Discord group that I happen to be a part of. By myself in a room with a microphone. 3 cats and a microphone. That's horrible. Reporting for duty, says the happy kid. Well, howdy, happy kid. Your thingy's always like noticeable. Warriors, what up? Yeah, some people, your icons are funny. I recognize your icons now. And other people, P-Ton did confirm SOS, 12%. Nice. Very nice. Beware, beware. Beware of the upthrust. Man, GME just stuck it to the bulls. Not gonna say I didn't warn you. Definitely warned you about that one. Talked about that yesterday. So the problem with this was that they pushed to the gap. We pushed to the gap on GME, and then we didn't do anything else. We just sat there. And you can see it's a 1, 2, 3, 4. So there's the double cat here. See the dip. It doesn't necessarily mean it's going to drop to new lows or not hold here. It actually has a bit of a widening structure to it. And so there's a trend line low. Could catch there. Could not go below 21.11. And then on the big picture, yeah, it could be a spring locally. We had a couple targets from yesterday that we looked at that were triangulated pretty low, and I'm not convinced we're going to get there, but we have to keep those on the radar because I'm just going to leave the target there. Because whenever bears or bulls are triangulating something, it just indicates like where the greater, maybe the support is, or the greater like desire is for liquidity. It's a Friday, so you're probably going to gravitate towards those rounded numbers, like your zeros and 50s, by the end of the day. Curious about IWM today to see what happens on this guy. We rebuilt this chart yesterday, and that doesn't really impact this very current price action. There's a lot that could happen here. But we did estimate that it could come back down to like the gap fill down here, and then there's also like another possibility that seemed pretty strong back around 220, 219, 220. And I'm curious to watch that play out and see what happens, because when I guess we can get rid of this. It didn't take the lower path, which is fine by me. But I guess what we want to say is that there's a chance we can kind of come back down still on IWM, and it's curious because I think the Dow and the Nasdaq were up, and then the S&P 500 and the small caps, I think even mid caps were up. But there's like 700 earnings reports next week. So it's not even a joke. That's not a joke. That's really the number. It's like 770 or something. I don't know. So there's a huge amount of major earnings next week as well. Like Amazon's got to post earnings and a few others that are really big names. And so it's going to be a big week next week for sure. I think OPEC's this week is the third week coming up. So right here. So I think you've got a lot going into the end of the month here, which makes sense. You know, you're building out into November where you're going to have like this kind of big event, you know, with elections. And so there's a lot of things kind of coming together at the end of the month here. And earnings is always a big season anyways. Doesn't matter if there's something else going on. So we're going to have a lot of interesting things, I think, next week. And I wouldn't be surprised if, you know, the S&P has a pretty major breakout. This is definitely disconcerting, but they did leave a gap. So there's not really much to say about it, except that it needs to recover back above, like, yeah, it's, how do I guess there's just nothing really new to say about it, except that we were talking about this yesterday, that what I call like an M cross, which is really just a waveform, okay? The basic waveform, if you're going to look at it in the simplest of terms, actually I should make it more accurate, because even though it's not always like perfect, it should have an M on the bottom of some kind, which is just a Wyckofian setup. The reason that Stockfather liked my idea of cat ears so much is because it simplifies a kind of a complex idea about distribution. It maybe oversimplifies it, because the cat ears aren't always bad, and that's where things get kind of confusing. But it does simplify it. So the M shape, right? And then on the big picture, you've got this is just a wave up, down, up, right? And that's the iterative nature of all of this, okay? All right. So what we've been talking about recently is there's a couple things you got to watch for. One is this jump here. And I've been repeating this a lot on stream, partly because like I want to teach myself to like better analyze this part of it, and also because it is the most important part of it, I think. And I think that there's not really much else to it. There's a couple things that have to happen, right, when you make the creek jump. So one is that you have to jump like the major creek, which is obviously this wave. So there's going to be a resistance built up, right, as it's going along. And there should be, on this dive down, a creek jump. That's the reaction up to the top. This is usually like the bigger move right here. It usually pushes the top if it's bullish. It doesn't have to right away, but it can push that top if it's bullish. And then the secondary move is kind of the one we're going to deal with right now. So this is where we were yesterday. And I think there was a lot of people that came on early and then they left. And if you left, you probably didn't see me doodle this. If you happen to come on like only for like 30 minutes or something, you may have only seen the downside. And I really didn't stop there. I talked about what could happen here if this was not the actual M. So what's kind of confusing maybe sometimes is that it's iterative. So what that means is that there's another wave right here. And what that tells me is that this should have like a double top, almost looking like a double top. It doesn't have to be perfectly a double top. It should have an M shape. And there's usually like a breakout here, and then it goes up into the next top. So what's confusing maybe about that is if we're just looking at that by itself, that would be like the bits and pieces if we're getting like really small. So here's where we talked about this yesterday, again, a little later in the stream. So if you like miss it, I hope you're not upset about that, but it is what it is. This could have been the M that failed. So it could be that, yeah, that was the M right here that failed, and it's going to just drop right down. So we talked about this maybe just dropping straight back down. And that's definitely a possibility, you know. The problem is that could also just be this breakout here. So there's kind of a mixed bag here where you have scaling, which is one thing, and I think you just have to use other methods of understanding, and that's what I did later in the day. I was like, you know, this really just looks like a creek jump, and that could be it. That could be what that was. And so if you look backwards here, It had to do with this dip down. So if you're wondering like, well, why did you even question that if it looks like it's the M? Because of this, because it didn't actually jump the creek until this move. So when it jumped the creek here, that's just one move out. So I kind of was like, maybe, and this is what I was saying again, if you didn't happen to catch it, it's okay. I think some people like pieced out after about an hour and then probably didn't catch that part, but I feel like that was around the time where like most people kind of leave the stream around the same time every day. This is very possibly just the breakout is what I was thinking, because all it did was go back and like check the creek, and I was like, well, maybe that wasn't actually the M. We could come back up again. So I drew this later, a little bit later in the day, probably like 2 hours it looks like into the stream, because this is right around 10:30 my time. So 2 hours into the stream, I kind of drew this as a possibility. I said, these are a couple different options on AMC, because if this is not the second M, which is what I was starting to think, maybe it wasn't because of that, it was just a creek check there, then you have a couple possibilities still, because this could still push up and generate like a new actual M top, right? Okay. I'm breaking down my thought process, so if you didn't understand it, you can understand it better. And if you do understand it, it's just a good refresher. So then I had like this idea, okay, we kind of figured that could be one of two things. So then you have this concept of like, well, how do you know if it's going to go up versus down? And it's actually pretty simple. So there should be at some point, again, like a breakout or a failure to break out. And that's simple enough. Everybody can understand that kind of stuff. You could look at the previous top here. So one of the things I said was, well, it would need to eventually come back over 426. But you can see the way I built it out was that you would expect it to come back to 424 first, and then build some kind of support here, and then push out. It actually went really low, went all the way back down to 417. So I wouldn't have necessarily expected that. You can see I had drawn a line here, kind of was anticipating it would maybe come down to there. And oddly, that's where it ended, the day ended, but it wasn't like, that wasn't what I thought would happen. It came really, really low, oddly, after that push. So there was a lot of selling that happened right there. It sold it back down, but it didn't break what I call like the ice here, which is this rising support. So that's kind of the critical difference between these two, is that on the one hand, you get the creek cross right here, and it doesn't break the support. It doesn't matter if it comes higher or lower, as long as it jumps that creek here, and then it doesn't break below what we've been calling like our ice level, which is the rising support here. And it didn't. So it came back down, it held it, and it did jump the creek. It just did it in a really like sloppy fashion. Kind of tried to, and then it came back through it, and then it did it again. So when we closed the day, we actually closed above. I saw someone in the Discord mention, they said, is this one of those bad situations that Booksy like hates where it upthrusts? Yeah, I mean, the answer would have been yeah. I personally don't like that kind of move because I didn't see the support built. So it's like, how do you know? You don't. It's that simple. It's not that it couldn't possibly be a good thing. If you hear me say, like, I don't like that move, it's not because it's inherently always bad. It's because there's no support, so it's just it's just a push, and you're like, well, I don't know. Like, it could be an upthrust, because all it takes is some institutions to start selling first thing in the morning, and it's just an upthrust. It doesn't have any kind of support built. And sure enough, we get this big push up in the morning, maybe high, like we almost came up to 430, and then we get sold right back down underneath that pretty important level at 426 here. And you're like, well, what's happening? I don't know. There's a gap. I mean, now it's like there's a question in your brain of like, well, what the heck? Is this an upthrust? What is it? Now, I couldn't tell you right this second. Is there room to run? Absolutely. Did it technically make the jump here instead of breaking down the ice? Absolutely. Those are two positive things. Does it need some time maybe to work this out? Yeah. If it's going to go up to 450 or something today, it needs some time to work this out. because it left a gap, which is not really ideal. I don't care that it's only a penny or 2 pennies. It's still left a gap. It hasn't filled it yet. It's not ideal to me. It also pushed up high and then came back below the previous top. So right now, I'm a little concerned because I don't think it can get to that gap fill. You can see right here, this is a jump above it. I don't think it could get to the gap fill right there without breaking below the creek, at least for a moment. So it's a dangerous situation to be in because it'd be pretty easy to knock this down here and then just slide low. And this changed the dynamic of the range. By going back up twice here, you've invited the possibility that this is going to be bearish because it came above this support right here at 426. It's an open door, is what I'm trying to say. Doesn't mean you're going to pass through it, but it is an open door. Because previous to that, it hadn't actually broken that level, and here it broke the level. So at this point, if it slid back beneath the ice, I'd be kind of bearish about it. I would think that we're going to go low, not just necessarily to 4, but maybe even below there. And that's kind of a bummer. So it needs to commit. You've got the 1-2 here, 1-2 jump. You got to push. You just need to find that support, and I think you're going to take back off. This could happen today. I don't think it's out of the realm of possibility. I think it's very possible. If we can build that support right here, I'm going to move this little green bar down to where that gap is. It is very close to where that creek is. If it takes a little while to get there, it seems odd. It seems kind of backwards. But if it takes a little bit of time to get there, it might actually be better for us because like half the day or something, because then it can give us an opportunity to get there without breaking the creek, which is just something I prefer. I'd like to not see that weakness in there. If it's going to continue, it makes it easier to confirm the move possible to the upside. So yesterday, again, if you were attending early in the day, probably didn't see all of this because I think it was around 10:30 when I talked about the possibility of the creek jump. And then that is just a simple way of understanding it, is that one of them jumps, one of them doesn't. So what you don't want in this particular situation moving forward, and then we'll switch over to GME in a second. GME is kind of more spicy, I suppose, at the second, but, well, they're both about the same. What you don't want right now is you don't want it to slide back beneath here. Does that make sense? That would be probably distributive. So, like, not the best. If it held right beneath the ice and then immediately broke back out, that would be like a head fake almost. But if it breaks down, it's definitely going to go back to the bottom. If it can hold here, it should find its footing and advance because it is positive. The way that this advanced is pretty good. So, yeah. So anyways, we left it off yesterday early in the morning around here. Nothing was really confirmed. And I already kind of spliced apart why I changed my mind maybe about what this was right here. So for GME, just pretty quickly, it doesn't look as good. I kind of like touched on this first thing, but frankly, like it double topped, it quadruple topped really here. And that's not always a great thing. It usually, I mean, frankly, this is thing, if you just look at it simply, it's really obvious. It's not doing too well trying to get above this like 2150 level. It maybe there's something about that with Max Payne, like they don't want it to be above there. I think on the big picture, this is where I've had the creek drawn for a little while. So I drew that yellow curve a while back. We've been talking about this a little bit, that it keeps trying to attempt to kind of get above it. And this is like the general path of the price action. And you can see right now it's just slamming its head against it. And I think part of the reason for that is this intersection, and we've talked about this already on this chart on the left, is the intersection to that really major downward creek here. So yeah, this wedge has a breakout target of like 23 basically, but it hasn't really made any of those advances yet. It's like kind of holding on to it. breakout targets for wedges don't have to be immediately met. Sometimes they're met like boom, instantly, like just huge pops. Sometimes it takes some time. A lot of those Bulkowski targets, their timing is based on, I hate to say it's like mirrored trajectory, but it's kind of like that. And there's not really a lot, he doesn't even really care about that most of the time. So he's not talking about timing on almost any of those breakouts because I think that it's pretty irregular. But the ones he does talk about timing on, he almost always refers to trajectory. And that's where I started really picking up on that idea that, yeah, it's probably going to follow some trajectory. So you can see here, like this is the downward motion trajectory of the wedge. This is the upward motion trajectory out of the wedge if you mirror it. I'd say it's pretty darn close, but a trajectory is a trajectory, right? It doesn't have to be like perfect. Now this is kind of disconcerting because it makes it look like, oh crap, wait, you just drew that and then it looks like it's the trend. It very well might be, you know, and that isn't great. This definitely looks like a breakdown and then it's hooking. But I would have said that anyways today because it came back below the major creek body. So yeah, they're slightly different on these charts. This one's a little higher. Not sure why. I may have drawn it to this extremity, which I think expanded, yeah, from this one. So this is like an outer one. And technically it's come up even higher since then, like up to here. But either one's fine. Like you can use both of them if you want, or you can use just one or the other. So yeah, right now, is it still kind of following this trajectory? Yes, but it failed to jump kind of this major creek and then this major creek. So you've got this intersection right here where it's just a cluster cuss of resistance. And of course, there's a horizontal, you know, support and resistance there. This is what was being built upon on these tops. I don't know if I would call this like a range, but if you were to call it a range, you would look at this as kind of like a center mark for that range at 2175. And that's just generally where it's been building out, that support on the top. Not really much resistance on the bottom, but we are hitting it now. So only right here and here do I see a lot. So anywho, we've got a lot to jump here on GME. I think it's one of those situations, and I genuinely think that this is the case, that if it manages to get above there, it's going to probably have some really significant moves. If we can build out and get that push to the 2310 kind of hallmark level that we want to get to, I think it's going to be a huge move after that. It's just got to build out there. And I've been looking at that for a while because on the big picture, it's like a super critical level on the greater schematic here. So don't want to go into high detail about it. I just want to point out why I think that's super important. And this is that 2310 key breakout level. It has to do with the this walk down LSPY back here. Specifically this area that wrapped around $24 for basically like a year. That's super significant that they built out that $24 region for like a year. It shouldn't be ignored. It's also really significant because we talked about this, but Ryan Cohen apparently knew that, and he did those offerings above that 24 level. And yeah, I think that he's aware of the impact that it's had. So he took an advantage of the fact, and we talked about this a lot because there's earnings reports and they all kind of gravitate around the same mark. Like they're almost trying to keep it flat for a year, each earnings. And it's really strange. There's a lot of weird connections to 24. We did a whole thing about that a while back. But 2310, which is the one I picked out, is kind of the bottommost support there. It may seem a little strange to some, but to me, like I look at things in terms of iterative movement. So when I look at this, what I see is that it's a wraparound, a double wraparound essentially of that value at 2310. So I'm looking at this as like a big move up with a wedge down, and you could see the middle wraparound at 2310. And then the same thing occurred here. you've got that middle wraparound at the exact same level. So it's clearly like distributing along a path, right, down to some support or creek, but it's using 2310 as kind of like a middle anchor for the overall move. This whole move down right here is kind of centered around that 24. And I think 2310 is just acting as a really strong kind of, like 24 I'm using because I think it's like the actual center, but there's two levels higher. One's like 26 and one's like 2310. And I think 2310 is the strongest one because that's what we're using locally. So yeah, 24 is important, but I think 2310 is probably more important to me. So when I look at this, I'm like pretty sure it's wrapping around the same level horizontally. And I think that's going to be the key breakout level. I think if we can get back above that support right there, you can see why. If we built out above that, we should be able to just kind of take off. It's the only kind of major marker locally that I can see that we need to get back above. So I'm pretty excited if we get above 2310. And when you look at the overall GME chart as it stands, it's like, oh, okay, well, there's a pattern here of kind of like pushing it back down below that 2310 to push it down to that 2050 level that was established, which is slightly below here. But notice like the gentle kind of M cross going on down bottom here, like that 1, 2, 3, 4. Even in the iteration, there's like a wave down low and this bigger wave up top. Imagine breaking out right here after jumping this creek. It's just so obvious to me anyways, like that's a significant move inbound if it can get above those two levels right here. Like I don't see it stopping until it gets back to the top at the 30s and potentially the 40s, because of the significance of like that region right here as a resistance. So it's building out that way. So I'm feeling really good about GME, but for today, it's a little bit of a mixed bag. It really just kind of head faked and rejected. You would say in Booksy terms that the M is pretty much complete. You can see the 1, 2, 3, 4. And I don't really have a great line to pick out on this one. I was looking at it first thing this morning. I just don't really see it. I think the best one would be this trend right here, and that's what just got hit. I already have this on the other chart, I think. I was looking at this earlier. And yeah, I was looking at that widening right here, that red line. I think that's probably the best marker for now. I don't really see a better one. Normally, like I look for that pretty clear and evident creek line or creek cross line. Sometimes it's really steep. That's the one we did yesterday. That was like super steep right here, and it goes like really low. But in this case, this is more like the 50-50 marker on the rise. So if you took this and you drove it up 50% bottom to top, you can see that intersection right there at 50. It's like anchored around the middle of that move from the bottom to the top. The 50% marker is not like something, I mean, I kind of made it up, but it's observational. It really is there on most of the waves. If you can measure 50% of the move, there's usually some kind of a creek marker in the middle. But I wouldn't have drawn this right. I'm just going to be honest with you, because look at it. It doesn't look like it matches. Usually I do from the top. I would have done like that. So it doesn't match at all. So I wouldn't have drawn it right, because I would have drawn it from the peak maybe. Yeah. So let's take a look. What could this possibly be? Well, you have a M1, M2, so it's cat ear 1, cat ear 2. Cat ear 2 usually has the 4 tops. So I'm seeing both are there. I do see a pretty nice jump. So I'm going to get rid of that real quick. If you're just looking at this in terms of like support and resistance and how the wave is working, this would be like the middle creek that you'd be looking at right here. Something like that. May have even thought that dip below it doesn't really make a huge difference to me because it didn't break the trend line there, so who cares? Yeah, so this is the resistance being built. This is the kind of the jump over that resistance. So this is the middle wave. and then you have the jump across. This is no different than when we talk about this stuff right here. Like, it's no different. We're talking about that resistance that's being built, and then the jump over the resistance. That's sine wave mathematics. You can definitely look at that different ways, depending on who you want to follow, what they talk about. Sometimes they're talking about the exact same thing on YouTubes and junk, but I think that on the whole, we're really just talking about the same thing, which is resistance, jumping that, building out a support. Visually, you can also kind of see it here. It's nice because 2138, which just happens to be the liquid center, right? Which is probably not, I'm being facetious. It probably is that for a reason. But you can see that's where the resistance was down here when it pushed up. So if you're looking at this from more of a, maybe a linear perspective, you don't like the waves, that's one way to like be observational about it, is like, oh, well, that's where the resistance was. And frankly, this could help you derive an S-curve. So we talked about yesterday briefly. I tried to make a good case for it quickly because I know that I talk about it a lot on the channel, but the S-curve itself is one that happens when the M jumps and it holds. So if this is indeed a jump and hold, then you should see an advancement again. If it's a head fake here on that foretop, it's probably going to just do a quick hook and then die, which is unfortunate. You guys are like, what? Yeah, it would be like right around here, probably. Like it would probably stop right now and then drop. So it's pretty close to being there. But if it does happen to manage a recovery here, which is pretty darn bullish if it does, then I would look for the S-curve to finish. So then I'd go to the bottom of this move or the support that was built at 2050. I'd do a 50-50 wraparound right there, and I'd look at 2219 as a possible place that it could recover to. I'm pretty sure, I know I said 23, but I'm pretty sure that that's close. Let me double check to the target. It's not really. It's not like not close, but the target's like between the two. It's right here because it'd be 65%, so it'd be 2250. So it's not quite enough to get you there. So it's really not the full leg of the thing, meaning it's like couldn't be like the end all be all. Wedge targets are wedge targets. Sometimes they hit perfect, sometimes they don't. We're not even sure that this is going to continue right now, so it's probably a moot point until it does. Like, who really cares? Maybe that has a target of 22. Maybe it has a target of 2250. It looks a little short of 2250, so, but not bad. So clearly, like, bulls are trying to make good on that wedge, is what I'm trying to say. Like, there's clearly a push here to try to get above this level, and if you do, then in theory, you should be able to get back above to maybe that 2250 level. Seems reasonable to me. I'm not 100% convinced right now because it made a move up that failed to advance over 2160, and then it dropped back low, and now it's facing a potential hook. Hook being the simplest way to look at it is it's almost like an inverted creek jump. So if you flip the chart upside down, you can see it pretty obviously. Like, oh, it jumped backwards, right? Like if we saw this in the bullish example, we would be thinking that that was really positive. I know it sounds a little weird, but like for whatever reason, like that's what we would see if we flip the chart upside down, and you'd be like, oh, it looks like it just jumped the creek. That's what a hook is. It's like an inverted creek jump. So it's jumping the wrong creek, but I know it seems a little odd, but for some reason, maybe it's because of the nature of these stocks and like what we see on them, but AMC and GME are really good when they confirm to the downside. I know that's a bit odd, but a lot of times when they make those creek jumps to the downside, they do the hook, and it's pretty obvious they've confirmed it. But when they go to the upside, they don't confirm, and it really bothers me. And what I mean by that is they'll jump a creek and they won't go back and test it. There's some examples here where like this went back and tried to check it, which is good. But a lot of times it just jumps the creek and it doesn't ever come back to check it. It really bothers me because they're religious about checking it when they go the other way. Like you can see right here, Look at those multiple tests, you know what I mean, to come back when they break down. But for some reason, when they break out, they don't check it, and then it's like that really hurts us later on down the road. So I'm a big stickler for confirmation checks and support checks, because when they don't happen on AMC and GME, it's historically for us has been really bad over the last few years. It just hasn't worked out well. I mean, you can sugarcoat it all you want when you get a big breakaway. I mean, there's things that happen in the stock market like that, but it's very difficult for me, because I'm like, yeah, if we don't check that creek, and we're not very likely going to see that advancement continue forever. And it bugs me. So I don't know, man. I'm not saying this is what that is. It could be a head fake to the downside, which, maybe it's not a head fake. I don't know what you call that, a foot fake. But like, we'd have to see it break back through. So I'm going to make an alert here at like 21.45. I think if it comes back through 21.45, it may be a fake out, meaning it comes back up, could break back out. This is an inversion over here on the other side. So when I look at it, I'm like, maybe it's a fake out to the downside. Again, I said that a minute ago. That could be really, really bullish if it crosses back up. That would be super great. That's like basically your spring, if it can manage to do that. If not, then the targets are pretty clear. I think we're looking at that 2050 level again, or 2150. No, 21. Let me check here. 21 seems pretty likely. 2050, not as much. So maybe 21, since Friday day. What are you doing, AMC? Delay tactics, I suppose. Okay, pretty low volume on that push on the whole, but it's holding. I mean, to me, it looks like it's crossed up, but I think we talked about this yesterday, that the price, the middle of that, which you can see it as like a support and resistance kind of equation, should be right there, right about there, maybe a little bit higher, maybe like here. It didn't look like it was going to break super, super far. Like it looked like it was going to go down maybe 434. So just like GME, that the current S-curve build out doesn't quite seem high enough. Especially if you're thinking that you're going to get to max pain at 450. So there'd have to be a little bit of extra move here. I'm looking at the 30-minute. You can see that RSI is kind of building out to being overbought already. It's not there yet, but it's been very touch and go on this RSI. Anytime it's gotten kind of overbought, you might get an extra up thrust, but it's pretty consistently sold off really hard on 30 minutes. This is one, this is one, this is one, this is one. So that hasn't ended well. You guys are like, yeah, but that's 30 minutes, Booksy. Well, two of these coincide with an hourly being overbought as well. The other two don't. They're a little lower. They're like in the 60s. And right now we're sitting in like the 60s. So, I don't know, man. It looks a little like a mirror here, the build out. Which would indicate that this is the wave right there, which makes sense because that's the triangle from GME. So if you look at the connection there between RSI, I know you guys are like, well, I can't see anything. You got these little things on there. Well, these were estimations about where you might go. They're old now, so I'm going to get rid of them. I think I want to keep that. That one's important. I don't think this is... I'll just leave the rest. So this looks a little bit like symmetry to me on a couple levels. So like one of the levels is right here. You can see there's a little bit of a symmetrical build out here. If you see that, if you can't see it in like the purple or whatever you guys color it as, which is like your regular RSI, usually you can see it in that moving average. And I definitely see it here. So this is the lower creek jump, right? We take this out and like just visualize it. That's the creek jump right here. So that's one piece of symmetry that we're looking at. There's another one that's a little larger. If you zoom out a little bit, and you can see that this as a bottom almost looks symmetrical. What's interesting about this is this looks like that classic bottom that we talk about quite a bit on our channel there. And hopefully I don't even have to redraw it. You guys know what I'm talking about. So that's interesting, because then you've got like two. So this is basically the exact same thing we just drew here. And then you got like the two jumps, which is what you would look for. But here's where this is kind of confusing, because all of that's happening as the price is coming down. So there's a divergence here, right, in this bottom that's pretty strong. I mean, I'm on the hourly right now, and you can see that divergence here. So that whole downward motion is divergent, meaning it's bullish divergent. The bottom RSI is making a higher low, whereas the price action is making a lower low. Foot fake. The reason I was mentioning why that makes sense to me, that it started here on September 27th, is because GME's wedge began then, right here around the September 27th mark. So it's hard to see it on AMC because AMC already had like this massive beak formation. It was already doing a long-term narrowing right here from way back. And I don't want to get too much into that, but there is an interesting breakout target if you use the narrowing, because typically it's like the poor man's way of doing the breakout target would be to grab the height of the narrowing and then apply it to the breakout level. And what I find that to be interesting is because that leads us back to 565, which is, you guys are like, well, yeah, because it's basically the height of the range. Well, in this case, it is. It's not always that way, you know. It just isn't. But in this case, yeah, it's basically the height of the range. So it's essentially like coming back to the SOS at 570, which is interesting anyways. I don't know. So I was using that wedge on the big picture for AMC. I don't see it really on GME. It's a little more like a flattening. We drew it out earlier. It looks like it's kind of coming down in almost like an inverted beak, right? But the wedge that began on September 27th, roughly, that is just right here on AMC, this little local area, as you can tell. So that's where the divergence starts on AMC, okay? So what a bullish divergence should give you is an indication that you're bottoming and that you should expect some kind of turnaround. This is really typical for AMC going into these beak bottoms. We had one right here as well. You can't see it on this time frame, but if you were to zoom in and you looked at a shorter time frame right back here, probably even down to like maybe 15 minutes or something, because it's kind of small, you should see that same divergence at the end of the beak. It's a really easy pattern. I like to stress it because it's one of those patterns that I get right quite a bit, because it's super simple. Like, it's already hit like a selling climax. There's a super high volume selling climax right there on the bottom. It already hit the selling climax. That just creates like a floor. And then it goes down and it tries to push lower on weakness, like really low volume push down. That's why I called it like the high heel, because it makes like a heel and then it comes down. So it looks like a stiletto almost. Ladies' shoe or man's shoe. I don't know. People wear stilettos, like anybody wears stilettos nowadays. Maybe a dog shoe. I don't know. People put dogs in stilettos. Who knows? Point is that it comes down and you can see the divergence is super clear. And so you have like a really easy to follow bottom, because all it needs to do is make a higher high, push resistance, and then make a lower low, or like a higher low. It's that simple. And that's like a super easy way to buy in. You could buy in right there. on the divergence. It's already turned around. It made the pushed the resistance. And this is one that appears all over the place in the market. It's not an AMC exclusive. It's technically, I think it's called an eve and atom bottom, because the eve is like a flat area. Don't get all weird on me about it. You guys are like, eve and atom? It is what it is, okay? Atom because it's phallic looking. I don't know. Eve because it's flat. I have no idea why they call it that. But it's called an eve and atom bottom classically. And it's this idea that you hit like a flat area and then you dive, and when you rebound, it pushes back and it makes a higher high. So it's a reactionary move. Technically, the breakout in the eve and atom bottom isn't complete until you come above like the top of atom. So that would be like here of the atom move, the second move. That's where you would actually buy in a more classic pattern. And the target for it is almost always like the distance on the height, which in this case is accurate. Like it's basically just a reactionary move. That's a Bukowski move. If you want to go look it up, you can look it up. I did a short video about it because it appears all over the place in the market. It's a super simple move. One of the easiest moves I've found to trade, like ever. So when you look at that bottom as a whole, that's something that you see all across the market. It's definitely not just AMC, but on AMC it often follows the arcs. So you'll get these like high heel patterns, and you even get like sometimes you get like a secondary high heel, which is what we got, like the stiletto, and you can see it visually build out iteratively. I mean, it's there like, frankly, it's there like 3 times, but multiple times, right? And so this gives you a really simple way of understanding that pattern as it plays out. And sure enough, back here, it did exactly what it needed to do on the second pattern, which is when it came back up, you can see it visually, it actually pushed the resistance right here as well. So there's probably 2 ways to measure this even atom pattern, although I definitely wouldn't go too crazy on this particular kind of measurement, which would be like measuring the one and then measuring the second one. And I bet you it works just fine because, again, this was a big breakout. So then you can take a look at that and you can measure it again from that top, and that gave you another potential target. So this is a highly accurate measurement system. Highly accurate. And then timing for it, really just inverting, inverting maybe a trajectory, and that's it. So does that make sense? So it's like super, 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 super powerful pattern. So that's why when we were coming down here, in the manner of speaking that I was talking about with iterations, I was saying that it's really similar to what happened back in June. And so you should be able to use a lot of similar kind of pattern exchanges. If you want to use the similar patterns, you can see it on the big picture. It's like a massive version of that. Okay? So when I look at it in retrospect, it's easy to see that and measure it out. When we did this live action, like when we moved forward, this right here, we had measured those breakouts because I'd seen that before, and I was like, here's where those targets are. We hit all those targets until we got to the top, and then we failed to continue. But we hit all those targets going up. So when you're looking at this, I know it's like, all right, man, so you've got like this ideas locally. Have you done any kind of work, big picture? Yeah, I have, and it's not complicated. When we looked at the comparison, we looked at a couple of comparisons. We looked at the one to March 2022. That's one. But there's another way to do it, which is to, let me reduce some of the clutter on this chart, which is, again, to kind of do that same conceptual, like even atom bottom, right? And in that case, you would expect this. I kind of already have it here. I didn't do it like, I won't say I didn't do it on purpose, but you basically already have that build out presented to you presently. So you've got the divergence here, and it's pretty large, like it's a significantly decent one. So the expectation would be that you would come back above. It doesn't have to be this high. It doesn't have to be 468. I don't think. I think because this is the bottom and it pushed up. It just needs to come first above 450, which is possibly what we're going to do today. We're try to get to there. It doesn't have to get above it and hold above it at first. It just has to build out a push, basically, like pushing resistance. So the floor that you're looking at is that 430 to 440. The secondary floor should be that 460 area. Those are the targets that we have. So if we were looking at a similar motion, we are, you should be able to take that distance traveled. I'm kind of using... Yeah, you should be able to take a look at that distance traveled here and apply it to the top. And that would get you to 507, which makes sense. So in some ways it's interesting because this is built out much the same way as that 50-50 nonsense that I talk about, which is like you're dividing this into like 50% quarter, you're like quarter system basically. You keep dividing in half as you go down, and it tends to play out really well. That like if you look at the key levels here, they tend to be about 50% to the floor, right? So you can see like the 50% level is that level we marked off already at 426. Like that's the halfway point. And then if you take another halfway point from there to the next halfway point, it's like, oh, there's another one. Oh, it leads you back up to 507. Like the reduction of that system is super straightforward. It almost always is divided in halves. And so you can keep going up and see like targets. There's another target right up here, right? And we've already gotten a lot of these targets, but like that's it. You know what I mean? It's not, and I just did that live so you can tell I'm not fudging it. It's not that complicated. So like in some ways it's interesting because you look back at something like that, you're like, well, that's cool that Bukowski could see a way of measuring that. Yeah, I think that even atom pattern has been around for a long time. We're not getting the quote unquote atom right now because right here you don't have that kind of big push yet, but you should get it right here. And then you would have potential if it breaks above that top, wherever that top is, it's going to go up to the next level. So if it pushes it a little higher, we can raise this a little bit higher. So maybe a better way to illustrate this would be, maybe it's like down here instead. I don't know where it's going to be exactly. But then you're waiting for it to make that higher low, should be around the 440 mark. And then when it breaks out again, then you have like a new target to the upside. And it's coinciding really well with our expectations, which is always good. So, meaning like we did this a different way and it pretty much produced the same results, which is good. So, that's always a positive in my book. Yeah, I don't think it has to come higher, much higher than 452 in order to accomplish that. So, that's good though, right? Because then you have like consistent levels that you can look at. And we already had like one of these because that was the intersection of the wedge, the center mark. There's a lot going on here, but at the end of the day, like the markers we have are really pretty solid. We keep doing it different ways, but they've been very consistent. So, yeah. So if you want to do the even atom breakout, you can here. I think it's a valid one. I think the divergence there is pretty strong. I mean, it's a good one on the hourly. That's really strong. So if I were looking at that big picture and I were like, well, wait, you know, is that an expansion of this or an expansion of that? I mean, you could do that. This is where, I don't want to poke fun at anybody or anything, but this is where a lot of people go into like fractal mode when they talk about like how it's just this iteration of the same thing. Well, yeah, if it's an iteration, it's probably going to look pretty similar, you know, meaning like it's a version of the same trading pattern. But that's like taking a wedge and applying it to a wedge, you know? It's like, yeah, you can do that, but a wedge is always going to look like a wedge, so what's the point, you know? I can do that, and you can be like, ooh, it matches, Booksy. And I'm like, yeah, it's the same trading pattern. But I already identified that a while back. So it's like, is there a greater purpose to identifying it as and saying, oh, it's the same trading pattern, and then putting a bars pattern up there doesn't really do much except for some people, except just be like, ooh, it's super, super similar. Yeah, it is. And that could give you a sense of security, because if it is a very similar pattern and you know it's a similar pattern, then yeah, the levels that are met going out might be very similar to the levels that were met over here. It makes sense. It's built out very similarly. Totally makes sense. Are we doing that? Yeah, we're doing that. We've got ideas about how that might navigate. The timing of this makes it look like this would last forever. Like you wouldn't go anywhere. You'd rally into January and just sit there and then die eventually. So at some point, like that breaks down because, as you know, like, because it's like, well, it's becoming itself. Like at some point, we're basically turning it into itself, because this area right here is actually this area right here. And it's like, well, then what's the point? You know, it's like it becomes its own infinite loop. That's not the way the market works. Like it doesn't just infinitely loop like that. You guys are like, yes, it does. So-and-so says it's an infinite loop. It's an infinite loop in that there's always waveforms and that they're iterating what is a behavioral pattern. So you're always seeing the same behavioral pattern throughout on different time frames. That's true when you say it's like an infinite loop. But an infinite loop as in like ABCD, 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 what that does is that it locks you into the idea that the outcome is already predetermined here and it's going to keep doing the same thing. I did that way back in the day and it's wrong, okay? It's just wrong. I was wrong. So if you're that kind of person, I'm going to tell you right now, don't waste your time because it's not right. When you get to this point right here, like use it for what it is. Use it as a way of understanding, okay, it's a very similar pattern, almost identical, right? So it could have a very similar reaction, but the end result doesn't necessarily have to be the same. And I think that's where we kind of go wrong, because you get to the end, you're like, well, if it's the same, technically this is just going to do the same thing again. And this is where things get completely and totally jacked, in my opinion, because people do this. And I'm like, yeah, you can't. At the end of the day, like, that's not the way it works. Because then you'd be like, oh, it's going to do this. Well, guess what? I can keep doing that forever and ever and ever, and it never leaves. It's just a gigantic widening. It never leaves this area ever. Is that the way the market works? No. You know. So use it sparingly as a way of understanding, like, okay, that level system that we used previously is accurate. And I think that, again, we already have those levels here. You could see that the bars pattern is just kind of coming up and meeting those levels. It's not that complicated. And that's about as far as you need to take it, you know, in terms of like bars pattern analysis. Because beyond that, it doesn't really tell you anything. It doesn't tell you anything else about the rest of this setup. It doesn't actually tell you anything about the reason why you rejected here. Right back here, it just says, oh, you're going to reject there. That's all the bars pattern. It's completely uninformed. It's taking that same rejection and applying it forward, and you don't want to do that. So one thing would be like, hey, why did it reject here? What else was going on? We talked about those creeks rising here and the M cross. And then, like, what would happen? What's the difference between this area and this area? Well, the range is significantly different. I mean, the fact that we're at the bottom of the range and we're lower than most of those supports, that wasn't necessarily true back here. It's a different time. The bigger the picture, the more you have to look at, the more information you have to consider. You also have the breakout of that cross trend thing that we talked about right here, which is not something I find to be at all insignificant. I think it's really important to not ignore, again, kind of that big picture analysis. And that was something that we talked about on another stream, but suffice to say, like, that's a significant difference. That wasn't going on back here, right? So the build out here is wildly different in terms of possibility, you know. And then beyond that, you can kind of go back even further and look at this and say, well, really what we're doing is just waves. And we built out a bigger wave, and then you'd have to look at where that wave should end up being. I think it's still going to end up being way up here, you know. There's a reason that I have this hitting earlier than the end, but I think it's going to end up being up here. And there is a reason for that. I don't want to get like too deep into that right now. But I have it hitting earlier because in previous iterations, when you have this kind of a massive wave, it often will hit later or earlier and then come back up, try to come back up and fail. But whatever, okay? Long story short, I think it's going to go up there if it breaks out here. And I don't think that using the bars pattern is bad. I just don't want to be reliant on it to tell me information about things that I already kind of know. So like, here's what's good about the bars pattern. We just did it and it clearly matches in a very similar way, this move and this move. They're both like beaks. But what I really care about is where were those levels at, and they're in the right spot. They're at that red and yellow level that I have. So what that tells me is that I'm right about the red and yellow level, that it is similar, and that the build out should be the same if it can be strong. So we've got a really good chance that that's going to be where those supports are built, if they're built, well. And that's a good thing. I mean, that's what we want ultimately. And I don't know if you guys remember, but back here, it may seem like one of those things that's like, well, that was a hurtful time, Booksy. I don't want to think about that hurtful time. But like, this is one of those things that, remember back in July when we talked about this and I said there's a possibility that this is the breakout. And at that time we were using some trends that I was like, hey, this could have that breakout moment and push up and then do a 50-50 and whip around, okay? And the only caution that I had was that this was a potential danger zone for distribution. Like, you could stop here and just not go up. And that's what happened. And it really stunk and it wasn't fun. But at this time, I remember people thinking like, they were kind of jiding me on about it, because people were saying like, well, you really think it's going to rocket from here? Like, you really think it could end up being, past $6 by, I don't remember, like mid-July. And I said, yeah, because the nature of this is one that has a check that was never made, right? Which is possible in the market, right? But also that like there's a consistency in that could be an area where you also have a rejection. This was the support built out. This is like a sign of weakness, and then the distribution, and they push below. And this is where it ends up rejecting. So there was a lot of possibility here for like, you could have continuance that moves up to this higher pocket and gives you the SOS. You could also have a breakdown that fails to continue, and then you'd end up coming back low. Well, guess what? Here we are months later, and we're sort of facing a very similar obstacle coming up, right? Where we're moving into a place where we're potentially going to advance, maybe quickly, going into elections and earnings right here. I've got these just kind of built out as they are. But scaling wise, I think it's suffice to say, like, we've got the right levels. If we don't have anything else on the chart, we could just have the levels. You don't need my little doodles. My doodles are just ideas about how you might travel. You just have those levels, and you could say, like, if you were going to keep it like super simple, like, oh, it's going to come up here, and then it's going to come up here, and then maybe SOS. Okay? And that would be like the simplest way to potentially look at this. There's probably going to be more that goes on in each of these little areas, but that would be like the simplest way to understand, like, here's what needs to happen to get to the top. All right? It doesn't really describe much else, but that's what it would be like, roughly. Okay? It doesn't describe timing, nothing else. So it could describe timing, I guess, if we get up there by elections, but whatever. My point being that it's a similar setup. So you also have the same kind of idea of, well, in this case, we're working on this like macro setup. We have a P and F that goes to the 16s. There's no doubt about that in my mind. It probably goes higher now, even to the 17s. I don't know if it's necessarily going to get there. There's a lot of other reasons why I don't think it necessarily gets there. A big part of it is this and that downward creek, and then the intersection here. All of that is kind of intersecting around early November, okay, which would indicate like Santa rally kind of stuff. But when we looked at this in a previous kind of iteration, it didn't actually get there at that point. It got there a little earlier because it goes high, kind of parabolic early on. That seems likely to me as well. And then it comes back down. And that's the nature of like the study that we did there. It's not the one that everyone's going to want to have happen, but that's the nature of the study that we did there. Would be a push up and then back down into January and then potentially breaking out going into late January, just like we did in 2020. Okay. Not saying it's going to happen exactly this way. That's just the way we did the study. Okay. However, all of that being said, when we look at where it could stop, this is still an area where it could stop. So just like back in July, when people were like, really, you think it's going to rise up to like $8 or $9 really fast and just keep going? I said, well, it seems possible, but it has to do with like liquidity. Like, I don't always know the answer. At this point, I think that we've had enough time. There's a ton of time spent down here. There's a ton of cause built up. We didn't have a cause to go all the way up to $17 back here. I thought we might do the secondary motion and just push up high, like kind of like what GME did, back to the 618 levels, and then perhaps do a whip around and get up a decent amount higher. But the PNF wouldn't have supported that. Point and figure count wouldn't have supported that. Now it does. That's significantly different. We also have the comparison that we made, and we found that, yeah, like it's comparable, and it certainly could be like, oh yeah, it's going to break out soon, and so on and so forth. And that's something that we've talked about, and we built that out, and we worked on it, and we did a huge amount of time in analyzing the 2020 setup to see if we got it right, so on and so forth. And I think that in the end, this is roughly what it looks like. In the end, this is roughly what it looks like. And there's a possibility that's the same thing we're dealing with now. If you can get that breakout for the SOS, this ends up becoming what we would call a slingshot. And much like what you experienced in March, you could get that slingshot of 2020 at least up to 880s. So I've got a couple levels now that are strong possibilities. But the secondary one that we did, which is the one that we talked about, like it was a completely different analysis, has us coming up to like at least the 13s. So there's a couple different setups here. And I don't know which is going to be right, but I would suggest to you that 880s is a likely target if it can make the breakout here. And then beyond that, I think that's only about half the PNF. Now it could just store that up, come back down, and that becomes part of a larger count, right, later. That's definitely a possibility. I don't want to discount that, because just because it doesn't run right away doesn't mean that it's never going to run. And that means that you could be looking at a much larger range accumulation. So if it doesn't go all the way up to 13, okay. Doesn't go all the way to 16, whatever, okay. It only goes to 8 or something, fine. But then it's not gone. It doesn't just like disappear. The cause is still there. It's reduced perhaps because you let up some of that, right, selling by selling off shares on a push up here if it comes up only to 8 or 9 and then sells off. So yeah, that's a possibility. We got to keep an open mind about it. So there's two levels here. One's at 6, one's at 880. And then the last kind of ultimate top area is really, for me, it's like 1380s. And I think all of those are valid targets, and they're good targets. And I wouldn't be surprised if it stopped at any of those. I would be a little bit disappointed if it stopped at like 6 and didn't go above it. I'd be disappointed if it stopped, a little bit disappointed if it stopped at the 8s. But for me, like, it impacts my trading plan to know like where those could be. So I have to be really careful, because I don't want to overestimate, the move and then be stuck holding a bag, right? Because I didn't get out when I could have gotten out. So knowing that there's possibilities here, just like back in July, which is what happened in July, was like I traded the upside, it got to the top, it distributed. It was a distributive pattern that I called out on the 10th, and then it did it again on the 16th. I got out of my calls like at that point. And those are things that you have to kind of take. That's where that's where having like a trading plan and understanding like protecting your assets and having that risk management comes into play. You might have really well drawn charts that pan out quite a bit, but sometimes you don't know. Like if it's not going to go, it's not going to go, you know? And I'm not going to sit here and pretend like, oh, you know, you knew this was going to happen or something. No, like I really had hoped that it was going to break out back in July, just like I really hope that it breaks out here. I do want to recognize that just because it happened negatively back here doesn't mean it's going to happen negatively here. That's a false, that's kind of a thinking error, right? That it's, oh, it happened this way back then, it's going to happen the same way here. No, that's not necessarily the case. Every time you roll the dice, you have the same chance, right? Probability doesn't work like that. And not even probability wise, or excuse me, speaking of probability wise, this is a completely different setup in that regard because there's a much stronger build out, much stronger cause at this point, and we have this macro build out that we have to kind of look at and respect. So I'm going to do something really quick. I'm not sure where that line is. See, this is what I was wondering, because it looked higher to me. So I'm looking at old charts. You guys are like, well, it was a mess. Yeah, a little bit. I'm looking at old charts because I don't know if I have the right marker. It's okay. We can keep both on there. Both are valid because one of them is just an outside resistance right now. That's the one we just jumped over. It's like the most outer resistance. But I think that this is actually the more accurate one. Because I remember when we went through this, we talked about on the 13th, that's where AMC could have pushed and it didn't. See, this doesn't look right either. I thought it was along this top. Now I'm not happy. I'm like getting grumpy about it. Something's off. I thought it was along that top. Let me make sure this is right. It's okay. I've been talking like nonstop. Give me a breather. Let's see here. That's not going to work. Fine. What's the low here? 239. It's on 239. Yeah, all right. That's close enough to being right. Probably used that marker right there, not the dip. And I don't know why I did that, but that's what I did. I thought it was on the top, so now I'm a little bit lost, but I'm going to leave it that way because I think that's close to correct. And then here, I'm going to do the same thing. So the high here was 1190. I'll take this back. Make sure that's 1190. Take this. That's fine. I'm going to leave that as it is. I should have locked these out. Kept them on the chart. Yeah, so this was the area on the 13th where it had presumably could have jumped over and it didn't ultimately make that jump. Now look at where we are now. You can see it bottomed out there. That was what we were looking at when we compared it to 2020. And I don't want to go back through that comparison again, but there was a similar thing that happened where it pushed out and then it found support and then it pushed off. And ours has just gone really low. So we're at 430. It's looking pretty good. We came back above the top. I think we left that gap there. Yeah, we just left it. So it is what it is. It's a penny. It's not huge, but it will probably come back to haunt us in our dreams. going forward. I hate that kind of stuff. So these are things that we're going to have to deal with going forward. But yeah, there's not much we can do about that. Maybe it'll come back there later on. I think we had estimated that could be a major anchor point at some point in the future, but whatever. If it goes above it, goes above it. Maybe it could come back down and gap fill next week, but I don't know. It takes off, it takes off. And if you look at the 2-hour RSI, it definitely looks like it's trying to break out, doesn't it? Check out that channel. The attempted channel move right there. See that? It certainly looks like it's trying to break out of this kind of... I mean, frankly, if you looked at that on the 2-hour and you didn't know anything else about the RSI or about the chart and you were just staring at that, you probably think this thing's about to take off because, like, really take off. Just look at it. It built out right along the top there like it was going to break out, and then it did. And if you look at that RSI divergence, really low. That's the lowest the RSI has been since April, guys. It's like really low. And that's true up to like the 4-hour, and I think on the daily as well. It's super low. So it really is building out quite well. I'm really excited about next week. I really am. I think this is going to be a really good couple of weeks here. Kind of stoked. I think the only thing that would screw us is like a really bad miss on earnings or something coming up. That's great, guys. This is wonderful. I think it's on November 7th, on November 8th. It was changed a little bit. I'd have to look at the news and see if it was announced officially. They always put like an estimated earnings date. And I want to say that it was estimated on like November 4th, but this is November 4th. So maybe that was already announced and this is just not updated yet. If someone wants to check, you can check, but you'd have to look for an official statement. Don't trust like any old news outlet because there may all be a little different. You know, just be careful because they estimate them until the company announces it when they're going to do it. So just all I can tell you right now is what's on the chart. Visually, you guys can see it. It's right here. It just says estimated Monday, November 4th. So I had been thinking it was the 4th. It could be the week following, which would be the elections week. Okay. Now, speaking of RSI on the 4-hour, look at that. This is kind of disconcerting in some ways. You guys are like, no! Well, look, it was breaking out on lower time frames. But you just take it for what it is. On the higher time frame, is it broken out on the 4-hour? No. It looks like a channel that could potentially reject and then come down. There is no divergence on the 4-hour. It is, however, as oversold as it's ever been twice since April. So, like, there's still positive here in that majorly oversold, but then it just didn't jump over. So I think we're looking at that as an important kind of factor in this. One other thing we haven't really checked lately is EMAs. I kind of bring them up and then take them away every now and then. So I'm going to check the 180. Yeah, they're up here right around the 460s level. So it's just coinciding with this creek that we already have. That's pretty typical for AMC and the stock market on the whole. The creeks that you see, I don't know if there's a better way to put this, but you have to remember, like, creeks are kind of old school. They were around before the idea of EMAs. They were not around, however, when Wyckoff originally did his Wyckoff stuff. So if you look at them, they're like 50 years old or something. I don't know. They've been around in Wyckoff for the last like 50 years or something. EMAs, as we see them now, really are computer driven. You probably could have done a exponential moving average. I mean, I'm sure people were doing the mathematics on EMAs and stuff back in the day, but it would have been difficult for like the average Joe trader to do that. You wouldn't have probably been looking at that primarily. I mentioned that because it just so happens, and people have asked me about this before, and they say, well, is a creek a trend or is a creek like an EMA? It can be both, because sometimes it acts more like a trend, and it is a trend, frankly. And then other times, or like a trend resistance or a trend support. Other times a creek is very flexible. It's like noodly, right? This is a more flexible creek right here. You can see it visually as like the red, the arc. But then EMAs tend to also act as creeks oftentimes. They just do. So like one thing that you'll find is if you do like cat ear lines, like I did one here with these 3 points going outward, that now it's meeting up with that. There's so many things going on right here, right? You have like a local level at 460, which is a historical level. So that it was built out that ends up being like it's a historical support level, right, at 460. So that was pointing towards 460 way over here. That can give you a sense of timing, like it might get there when it triangulates at that point. But now look at the EMAs. They're also literally the 90 and the 180 on the 4 hour are also hovering around the same mark coming down into that spot. And you had localized support and resistances built on the way down. So there's a number of things that are intersecting at 460 going into next week, potentially. So like that's normal. I don't really think that that's a huge aha moment for me. It just sort of always ends up being about right. This is the daily. It's starting to look worse and worse. I hate to say that, but the 180 on the daily, I would say worse. That makes it sound really bad. Actually, you know what? I take that back. I'm sorry I said that. Because it's not worse and worse. It's just the position of it is different. So back here, when we looked at it, we thought maybe what we would do is like whip around that 180 on the daily, which we rejected off of. We whipped around the 90 on the daily, which is the same as saying like the 180 on the 4 hour, right? Which is down at the 485 level. We kind of did this 50-50 almost move around that. Again, I'm not going to like overstate that it happens to be the same as certain levels and stuff. That's not a big deal to me. But there was a hypothesis back here, if you recall, in July that we might hit that around the 8s, which is still kind of where we think it might be a resistance. That made sense, and that we would do maybe a whip around and go up to like 14 or 15. That was the TA back then, if you were around at that time. That's what we were talking about. Well, there's a similar setup right now, but interestingly, or maybe not, you guys tell me, this has been brought super low. So instead of being up here at 871, it's now almost a straight line coming down. Look at where it is, 630. I mean, that's amazing in some ways. You guys are like, I don't know, man. You think things are amazing. I just get frustrated. Yeah. I mean, it is frustrating, but it's amazing too, right? Like, so now it's the 180 on the daily is literally hitting the 180 EMA on the daily around earnings. Looks like it's going to intersect right at 630, which is the target. I mean, look at it. That's the target for the waveform reaction. That's pretty amazing, guys. I mean, that's pretty insane mechanical TA, if you will. The mechanics of the market at work. You guys are like, it's algorithms, man. It's algorithms, you idiot. You guys are like, why are you being so mean to yourself, Booksy? Because people come on here and they tell me that kind of stuff like I'm a moron. They're like, it's all algorithms, man. You can't trade any of this stuff. And I'm like, yeah, whatever. I know it's algorithms. I'm not stupid. I think that's part of the reason why it works so well. When stuff like this happens, you're like, okay, so basically now it's got a perfect intersection here at the SOS with what we see as like the waveform and there's just so much stuff, and the top of the range and the 180, daily average. It's like crazy, right? How much stuff is going to potentially intersect right there. And that's where we had kind of triangulated it to. I did this based on a completely different analysis, right? This triangulation over here. And it's frustrating that it took so long to get there, but we didn't have a lot of this information. We didn't have all of this information early on, right? So it's like, it just takes time. Anyways, what would that mean for like highs? Well, I think you have to kind of just take it for what it is. Like if it only did a 50-50, it's only going to get to like the 890s or the $9 range. Is that enough for a lot of people? Probably. If you're holding on to like leaps and junk, they're probably going to rocket pretty high. You know, when we moved from here to here, that's a significant move. They went ridiculously sky high. I think most of us, if you did get out like me, I got out in like the 10s or something. I couldn't catch the top. But there's not really much else to say about it, except that I think it would still be a significant move, and you'd probably still make money off of it. If you bought in low and you have a decent average, it's still a 120% move. That's not insignificant. Most stocks don't make those kinds of move on a regular basis, so that's a big deal. Is it what we ultimately think it should be? No. But it's just another way of kind of looking at this and saying, all right, there's another element to this as a potential confirmation. And then the one that everybody's going to want to squawk about is the SMA, because historically the SMA has indicated some major breaks at different times. I would caution with the SMA, though, overestimating it, because it has had moments like, for example, in August was a big deal. Like, we crossed up like everything in August, and it's still distributed. So just because you break out of something does not mean that you're magically going to automatically means you're guaranteed to go. Is it a bullish signal? Yes. Did a lot of people probably buy in here? Yes. Did it fool a lot of people? Yes, it fooled a lot of people. I think it was like Morgan Stanley or somebody was thinking it was going to come back up to $30 or more. They had already had like a ton of puts in place, like really high. Like, there's all kinds of stuff like that I think that, yeah, those signals can really mislead, and your operators can really screw people over. But we also have APE, and there was another thing that happened there. I want to stress this because back in the 2020 range, it did break the 200 and all of the above here as well. Like, it didn't just do it at the very end and take off. Like, that's not really what happened, right? So it was pressed, and then it pressed again, and then it pressed again. And it did break over it for a short time from August. It was like 3 weeks, basically. 2.5 to 3 weeks above it. You guys are like, yeah, but this is different because we've been below it. We've been pushing down. We're definitely going to do this kind of move. I don't know. You know, all I'm going to say is that the idea of it as a metric for breakout has to be a little bit caution, because even back here, it's like, I know this is a different time, very different time for the chart in terms of like how many people are involved and all that stuff. But in 2018, it spent several months above the 200. It never really broke back out because it ultimately didn't break out of this resistance. And this is kind of where the rubber meets the road, right? It's like you go back and you look at it and you're like, yeah, there was a breakout, but where did it stop? It kind of stopped like halfway up the stream. It just never kind of went back above. And ultimately, this was just a hook, right? Like, it was a reactive move back up to test that support. So like in the end, yeah, it broke out there, but it didn't ultimately break back into the previous range and hold it. So this did. This is a different time as well. So like both of those are examples of, like, this clearly broke out and then held it, right? So you have to kind of take it in stride. I look at the EMAs as great secondary enforcers. Like, if it holds above it, I think it's a great way of thinking of it as like a massive support. This is just weird right now because everything's like separated in a weird way. Everything was really close together back here. Everything quite literally pinched together in one singular point in January. But like, strangely, if you look back at the moving averages, in some ways, I don't want to say it's the exact same. It's almost more similar still to the September 2020 area. You see that 180 is like above. The red one, which is the 90, is below. And then the orange, which is the 200 SMA, is in between. And we have something kind of like that right here. Like, they crossed down right here, and it's just kind of different. And something similar to that happened I think right here as well, like one crossed over the other. I don't want to get too into the detail of that. I just think that's just interesting to note. Like it's got potential that if it breaks that, it could just go and like fly to the moon. But it's also not setting up the same way it did in January by a long stretch. I think you'd have to look at that and do some kind of mental gymnastics to say that it only depends on this and nothing else. It's like, no, I don't think so. Like it has to depend on multiple things. So do I think it's a positive thing if it breaks above it? Yes. Where is that going to happen? Right now, as the crow flies, it looks like 445. It would be like us. We already kind of marked this off, but basically if we pushed up to maybe the 480s, 485, and we made support at 460s, probably by that point, this will have curved up a little bit. Not a lot, but maybe a little bit, maybe flatter. And so you might have that as a support right there, like a confirmation that it's going to continue. Still very bullish. And you should get a decent buy-in as it passes through these. So like as it passes above this level right here, you get a big buy-in. That could be that big push that we see up to, 485 or something from like 450, right? Once it gets above that level. They may not want to cross that today. I don't know. Because that could cause like a big influx of buying. Last time we jumped it was back here, really jumped it, not just distributed along it, was back here in September on the 6th. We really pushed off of it. So we'll see. Those are just things like I wanted to point out because we haven't looked at them in a while. We don't always look at EMAs, but I think they're important. I just don't look at them all the time. I haven't really looked at anything on the EMAs they're always on my chart, one of the charts on GME, but I don't use them that much on GME, and I don't think it's a bad thing to use them. I definitely think you could use them, and there's probably some stuff going on here. It's just not my cup of tea. I'm not using them all the time on this chart. So has it come back above? No. So I set an alert at 2145 because if this pushes, this is an inverted chart on the left. If this pushes back above that marker, I think it's back above the ice and it could just take off. If it rejects and it continues to reject along that going up there, it's possible it's still just a hook and then it could dump pretty heavily. So we will see. Really happy that IWM continues to hold over 225. It's building a lot of range up here, which is good. I mean, I think it was like Wrench Capital or somebody. He likes to use the word comfortable. Like there's a comfort level in trading that region. What I like about that is that he's talking about liquidity. I don't necessarily agree with him because just because it's trading above a support does not mean that it's comfortable. Like it could be distributive, for example. That happens like all the time. That's the same thing we were just talking about on AMC like back in August. Yeah, it traded above all these EMAs. It looked comfortable. If it's just that's the only criteria, then sure. But what I like about that is the idea of liquidity. Like there is trading happening. It's not just pumping and then immediately selling off hardcore. So one way or the other, there's something happening above it, and that's a good sign because we haven't traded above it since, 2021? We haven't been really trading above it. Every other time we've kind of poked through it and not traded it. So I'd be happy to see it hold here. I'm not particularly married to the idea that it has to just take off. We talked about possibilities for downside and long-term, how this could maybe look going into the elections and stuff. There's certainly always the chance it just rockets. And I was like kind of wrong about estimations of timing. But the way that we did the timing yesterday was pretty solid. I mean, I was really happy with that. It was a really good session for us. I was personally like, yeah, that was cool, man. We found a lot of stuff that was really solid. And it may not be 100% correct, but it looked pretty darn convincing. So the way I see it is this build out probably needs another M cross. And I'm thinking it's going to happen going into elections. And then elections may just dump and then reset because that's typical for the small caps is to like they get kind of shell shocked and then they recover. This has happened almost every time we receive news, is that people sell them off and then buy back in. So I don't know for a fact that's going to happen, but it fits the bill. Like it fits the pattern that we might expect to see here. The other possibility is this is a shorter term S curve and it follows it just straight up. I mean, it's fairly straightforward. But in both cases, it seemed likely, meaning like the probability is a little higher, that IWM would come back down to 222 or 220 before it takes off. It seemed very likely that that would happen. And I'm really eyeballing this area because I think it's the strongest suitor that we have. I think it's the best. It's like a 618 kind of area retrace, so it's in that golden pocket. It's got the retest on like a macro. I would call it a creek, but it's really, I mean, it's kind of a fan from the top, the previous all-time high, a fan marker. And then it's got the creek locally that we haven't checked. We just haven't really checked it. So I would be a little bit shocked if it just took off. So I think this is like an SOS type region here, potential for that, and then maybe with a backup. But we'll see. I don't want to put that ship out and say, oh, it's going to definitely happen, and then it's maybe a little different. The widening is broken down today. So like looking at this left chart, the widening is broken down, and again, it's sort of like what we're seeing with GME. It's sort of like it's got the potential that it could reverse, but right now it just looks kind of like a hook. And you would see that as a rejection. A widening that breaks down typically comes back to where the widening began, which I think is right here at 220.50. So there's a widening target down there, which is pretty low. It's pretty close to what we were thinking, though. 220.50 is pretty close to this level that we were looking at on the other chart. So yeah, I'm reading through some stuff, just checking it out. Yeah, Peloton, I don't know, man. Like, it is what it is. It made the push above, and it found the support. I just shift my chart over a little bit so you can see it. So it definitely had that move. It's got a gap here, so that's meh. You know, at 532, not the best. We mentioned it a little bit, I think, when we did this chart, that it just needed to hold a support above 550. It's holding it right now. So if it can hold that support, it may continue. Not super thrilled with the RSI because, again, it looks like a bearish divergence to me. Like it's making a higher high on lower volume with a lower RSI. So it looks a bit bearish to me. Just straightforward. That could change on different time frames, but that's the way it is right here. And I think we had seen that same thing as a possibility here, that even if it pushed up again, it may not go all the way. In terms of like that creek, I mean, it's possible it's already got it, but it doesn't look like it did, so I'm not sure. Why is this way out here? What are you doing, Booksy? I don't know. It didn't look like it met that, but it did meet the 596 level, which is, again, the place that it dropped from. So we will see. I don't know, man. It's a tough one. If I had to if someone said, hey, you have to tell me like what's going to happen, and you have no other choice but to tell me, and you have to make a yes or no, I would say probably back down, because again, I'd have to just look at this and just kind of see it for what it is. But with an earnings coming up and then elections coming up, who knows? This could pump on apparent weakness and just keep going. You know, I don't want to make it seem one-dimensional. It's not. But if I had to pick a direction, I would pick down. I know it's like maybe counterintuitive, but from a technical standpoint, that's the way I would go. From like a fundamental and like outlook standpoint, I think you could go either way because weird things happen around earnings and big events where you might push pretty far on a apparent weakness, right? And I want to mention that this didn't come back to meet this level. So yesterday, I think we talked about it going up to maybe 675. It hit the first marker at 596, but it hasn't obviously gone up to 675. So there may still be like a push, and that could change things. So you have to come back and look. I don't know. If you were in this at the bottom and it's running hard like this, me personally, like I wouldn't be looking for much else, but because I'm like, it's on the 4 hour, it's already getting overbought. I mean, anything in this zone up here would be fair game. So if it passed into that area, I'd be like, probably going to sell some. That's me though. That's how I would trade it. And then I don't know, big picture, maybe it goes farther, but it is what it is. So MPW taking off a little bit back to 485. Not much to say about this right now. That wasn't said yesterday. If you missed it yesterday and you're interested in this, I kind of flip-flopped one day to the next because I was very like bearish for like a moment because I just really didn't like the way that the directors were handling things and how they were managing it. But I flip-flopped, came right back to it. So genuinely want this to do well, but it needs to kind of make certain advances. It hasn't gotten there yet. So I'll keep an eye on it, but I'm not going to like elaborate on that much more today. I think there's a strong enough possibility that this could end up by mid-November up at 8. And just like AMC and all these other guys, that there could be a massive move incoming. I'm heavily positioned in this. So you can call that a bias if you want, but I genuinely think this could be just a scare tactic and they're going to buy it up and take it up from here. Maybe that's a bias. I don't know. Okay? I don't want to be Mr. Perfect here. I just want to let you know my thoughts on that. So, what else? I don't know. I haven't really looked at much else today. We could check out Doge. It's been a minute since I looked at that. I'm pretty bullish on it, but I think, again, long-term bullish as opposed to just short-term. I don't really care too much about the short-term. I knew that it was probably going to go up and then come back and check the creeks, and it did. Now it's pushing up again, and I'm expecting it maybe to go to 16 or 17. So it's looking really good. It is overbought on the 4 hour already, which is kind of a bummer. So it may need to take a breather here before it goes back up again. This could be something that works itself out into elections even. I was just kind of estimating timing over here, but this doesn't really mean much. It's more about that level at 16, 17. I do think this could be long-term one of the biggest money makers that we see in the next couple of years, just based on where it's at and where it could go. Historically, it's a massive, massive push that could happen. So do what you want to do with it. Do your own DD on it. I think it's a really good trade. Potentially. It's crypto, so if you're not a crypto trader, probably not your cup of tea. And it's Doge, which is kind of weird, because you guys are like, isn't that like a meme? Yeah, you have to kind of research it and look into it. There's an unusual amount of support for it for various reasons that you can look into. I'm not going to go into it right now. It's not like every other crypto on the block that kind of catches fire and then fizzles out. So it's been going really strong. If you bought in early on this, you would be probably like a millionaire or something. I don't know. Where would you be? Let's see. I'm kind of curious. Hold on. It's like Bitcoin. Some dude is like suing the British government or something because they won't let him find this Bitcoin that he bought in like 2018. Apparently he threw it away. I don't know how you can do that, but he threw it away. And he's trying to like, he was trying to dig in the garbage dumps for it, and they won't let him dig. So he's suing them for like $200 million or something because they won't let him dig there. I don't know how he's going to win that. And I'm like, I mean, it's worth like billions, but I'm like, yeah, he's not going to, I don't know how he's going to win that. I don't think you can legally sue somebody for not letting, like a city for not letting you dig in their dump. It's their property. But whatever. This is 103,000%. So if you had bought like just $10 of it back here, you'd be a millionaire. That's crazy. Yeah. But the next leg up, if it happens, and it doesn't have to go all the way, but if it goes at least to the top of this channel, the next leg up is like $7. I mean, it's still 11,000%. It seems ridiculous to me because I'm like, I know that that's like almost unreasonably high. And I'm like, I don't really get it. At the same time, like, why, is it that valuable? But it is what it is. I mean, if the technicals are there and it supports it, it could definitely make that move. So there are some minor things that are kind of odd. One is that I do want to mention this. When you look at how overbought it's gotten in recent days, like in March, it got really overbought. That isn't really how it's panned out in the past. If you look at these past movements, the last time it did something like that was back here in 2016. It got overbought, came back down, chilled out. I made a level here because this is where it likes to take off from. And it took off, but it didn't end up making like an extended high. It took a lot longer. You see that? So I think that's important because I believe in the idea that the relative strength index is kind of like a good metric of, well, exactly what it says, which is the strength of it. And when I think about buying and selling, I think about how, like, if you're getting more overbought more frequently, you're going to have to take bigger and longer breaks. So, like, that's exactly what you see here is that it takes a really long break in the middle. This is like 5 or 6 months or something. And that's really different. And I think it has to do, again, I think it has to do with this here. So there's this kind of, see that? And then it gets overbought again just to get to the top. That's a little different than what happens here where this particular moment, it never really gets, and I'm on the weekly, but see how it's like a clean build out, up. There's no massive break in the middle either. And so it does, yes, double top just like it did previously, but it's a very short-winded motion. So the reason I drew it the way I drew it here, where it's kind of long-winded, is because that's the way it seems to me right now. It looks a little bit more like what happened in 2016. So I would suggest that the first move itself may not be like this where it just shoots all the way to the top. The first move itself may only go up to about $1.30. It might just be the breach of the top, which is kind of what happened back, I think, in 2016. Yeah, it just kind of comes up and anchors itself on the top, right? So I would suspect, just based on the overall kind of appearance of it and the way that the strength is a kind of how people are buying it, I guess, and selling it, I would suggest it's going to anchor itself here around 70 cents for a while. It's still a big move, but I think it's going to need to take some more time. And it's one of those reasons why I think, yeah, you could get an early part of the year move in January or something, and it chills out again for like 6 months or so. And it may be very similar to what happened to AMC and GME, where it's like a January, June type thing. And then you get a push up later. And February 2026, just like, I mean, you can't make this stuff up, guys. I really did not make it up. It's $10.60 there. And it's based on these trajectories. These are the ones that are hit. You can see bottom to top, bottom to top. This is literally sine wave mathematics. We've done this like a dozen times. It looks fancy pants, but it's not. Like, it is absolutely 100% exactly what we've talked about. And yes, I feel validated saying that because this is something that I go a squawk about like every day on here. And it's like this simple idea of you're measuring from, top to bottom, bottom to top, and you're getting those 50% markers through and through, here, here, and you're getting that in a way that gives you mathematical measurements. And then in addition to that, you're getting like those center mark measurements on those curves, right, as well. And so it's a really powerful tool in trading. I mean, super powerful tool, guys, in trading a channel. Like, I don't know of a better way to trade a channel. I think this is probably one of the best ways I've ever seen. It's just super powerful to me. And so when I look at this, I'm like, yeah, that doesn't surprise me that the bottom here, hint, hint, nudge, nudge, like the bottom here would point to the top opposite this 50-50 split. So like you have this division, right, amongst the chart, and it's a hard one to get because this is not like all perfect. We can see it in retrospect a little bit easier, but that division right there, right, among the chart, that's 50-50 gets you back to where that previous top. So it's a wave that's very consistent. So much the same, we have a lot of that consistency here, and I'm using the bottom of the wave. And it may not be perfect, I don't know for a fact that it's perfect, but it's really close. It could be a little bit earlier. It may be more like right here in November of 2025 or October 2025. But regardless, it's like a window right there that's pretty clear. I marked it off. So like that wave analysis works, and it works on trends really well. So it's been very consistent for Doge. And I know that not everybody trusts crypto, not everybody likes it. And I'm not even somebody that's like heavily invested in crypto, but the fact of the matter is, if this can even make this move remotely, even partially, it's 1,000%. If it can go all the way, that's a 10,000% move. This is like actually smaller, I think, than a lot of these previous moves. This was like 13,000%. This is like 9,000%. On average, it's probably about right. But that's insane. I'm not a big fan of like get rich quick kind of stuff. I don't think you just dump your money in anything, but like that's a really consistent pattern that's playing out right now. And if it breaks out, I think you're going to have a pretty good chance that it finishes the move, I mean, that's pretty amazing. That's bigger than anything we're talking about on AMC and GME, just for the record. It just is. So, yeah. I don't know. I don't want to, again, it's kind of like you could easily like maybe measure this different ways, but get a little bit too overzealous perhaps. But if you bought it like today at like 13 cents and somehow you held it the whole time and you managed to sell it next year for $10.32, $10.32, that's a huge amount of, gain. Let me see. Sorry, I clicked away from it. Even like 10, just saying like $10 or keeping it simple. Maybe even a little less than that. I don't know. Doesn't matter. That's 7,000%. 7,086%. That's insane. I'm going to end up being a crypto guy if I get money like that from Doge. Give me a break. Guys are like 7,000%. Yeah. So if you invested like $100, that's going to give you $700,000, which doesn't even make any sense to me. That just seems like too much, doesn't it? I'll invest $100 if it could result in me getting almost $1 million in a year. That seems really silly, doesn't it? Some people, I guess, have done that though, right? Like, you tell me, is there any crypto billionaires out there like that you guys invested in this and then, I mean, it just seems ridiculous, but like that seems way too easy. Doesn't it? Am I wrong? Should we be allowed to make money that fast in the world? Like, I don't even know. I guess as long as there's buyers, you could be a seller at that price. As long as people keep buying it. This just seems bonkers to me. You mean we can make $1 million in like a year? You really think that's going to happen, Booksy? I don't know. It doesn't really make a lot of sense. But yeah, I guess it could happen. If it does the same thing again, it's happened 3 times. Well, not really. 1, 2 times. Yeah, I don't know. I suppose you'd want to be careful here. I think this is probably the danger zone at like 20 cents. And like the fear taking over if something were to happen could cause this to like crash. So you just have to be really careful. Hey, GME, coming back down. I mean up. Through the ice. It beeped. It went beep. See that? So it broke above. I have it inverted over here, so it looks like almost like a fake out. So I like to see that inverted sometimes. Just helps me to like clear my mind about it. It's hard when you're looking at it one dimensionally all the time. So now we're going to look at this as a channel, like a flag, and we're going to see if this breaks the flag. So I'm going to make another marker, an alert on this trend. If it breaks that flag, I'm gonna say it's safe to say, I don't want to be like overly confident in that, but I think it's safe to say if it breaks this flag, it's probably gonna break all the creeks that are here, and I think we're gonna see it push above 2175. So it could be a very nice bullish move. How are you doing the math to 700,000? $100 divided by 13 equals this times 10 equals that times 10. Let me double check it. Maybe I just multiplied something. I hit the calculator and just hit the buttons wrong. I wasn't even thinking about it. Well, because I said 100 times, what was it, 7,000? What's 7,000%? 7,000%. But I guess it's maybe not doing that. Or 7,000% is insanely high. I don't know. It's doing weird things. It's not 10x though. So where are you getting the 10 times 10 number from? It's not 10x. Why are you multiplying by 10? Oh, you're saying because $10. Yeah, maybe I did that wrong. Hang on. It's like 10x. Booksy, you idiot. Can't do math. Actually, that looks like 7,300%. I see what you're saying. Yeah, so $100 times 13 cents, $13 worth. But, yeah, then you multiply by, but then that is multiplied by, I'm like confusing myself. You're selling it at $10 a share, but that's not actually right. So you're saying that times like 10 or something. Hang on, let me do it again. Why am I being dumb about this? So let me do it. I want to look at GME though while I'm doing this. Bro, 100 divided by 13 times 10. Super simple. Well, that's what I said. I don't know how I did it, why I did that wrong. It's not divided by 13 though. Well, it is. Never mind. So you'd have 769 shares times 10. And then you sell them for $10 a piece. Weirdly, I don't know why I did that so wrong though. Hang on. So let me think about percentages. Hold on just a minute. I did it really wrong. You're like 700,000. What? What did I do wrong? Hold on. I think I was thinking dollar value. I wasn't thinking like shares. But you're right. You should be doing it with shares. Yeah, thanks guys. I know I'm an idiot. I genuinely don't know why I did what I did. I was just a brain fart. I'm good at math. I am pretty good at math. I don't know why I did that. But that was dumb. Yeah, you guys are right. You're not good at math, Booksy. You're an idiot. I think I just multiplied by 7,000%. That's not right. You don't do that. Because that's not the way it works anyways. Yeah. Okay, so I think my calculator, the way I typed it in my calculator, I didn't type it in right. This little dinky calculator isn't doing it right. So like, cause like, what should be is like 100. If you make 100% on $100, you should be up 200 to 200, right? Because 100% is like doubling it. You make the same amount basically. Let me try something else. Hang on. Yeah, because it would like double it. Like 100% is doubling it. So my calculator is not doing the percentage thing correctly. Why is it doing that? Hang on, let me see. Maybe if I did 1 point, no. So if I did like 110%, you do like multiply by like, but you'd have to add it back. So you do like my 1.1, for example. That's obviously going to give you 110 plus the original 100, 210. So what did I do wrong when I multiplied it? So $100, I guess you have to consider the fact that, yeah, I didn't consider the share value, which is obviously like the most important part of that. It should have been closer. If I had just done it on average, yeah, it should have been closer to, the way I should have done it was multiplied it by, let me count 1, 2, 3. So what I was doing is using like a secondhand way of doing it, which is trying to use the percentage button on the calculator, but that doesn't actually work anyways because you have to do it based on, it just doesn't work. It doesn't actually give you the right number. So if I typed in 100 times 100%, it should give me, like what's 100% of 100? It should just give you 100. But instead the calculator gives you 100,000, which is not right. It's like almost ignoring the percentage. I don't know how it's working. This thing is messed up. And every time I click the percent button now, like see if I go like 100 and then I do a percent, it just goes 1, which makes sense. That's the way it should be, times 100. So if I did 7,000%, that's 70 times 100. That's the way it was supposed to be. That would be like 7,000. You see that? But if you go like 100 times 7,000%, you get 700,000. You see how backwards that is? So the calculator didn't group it, which is not the calculator's fault. I should have just known that the math was wrong. So if I do 7,000%, that's correct, because then that's moving the decimal 2 places. It's 70. See that? Times 100, that would give you 7,000, which is accurate. You guys are like, well, that's not perfect. No, it's not perfect because I'm not multiplying by the share value. I'm just thinking about like monetary value. What's a 7,000% increase? If you start with 100, it'd be 7,000, right? Like, it's simple. That's super simple. But like, instead of doing that, I did 100 times 7,000%. And that didn't, for some reason, it doesn't change the 7,000 to 70 on my calculator. So that's the reason why that seemed really stupid. That's why it didn't seem realistic. So this is a lesson learned for me, because I use this little dinky calculator, and I'm like, I probably just assumed it was fixing the percentage, but it didn't actually fix it. It didn't do anything. It just kept it 7,000, which isn't right. So it's not 100 times 7,000. So sorry about that, guys. So if you did it correctly, and you did like, because it doesn't really matter what you buy it for. I know that's a weird thing, because we're talking about even numbers. We're talking about an investment of an even number of 100 and then selling it at 10. You guys were looking at it like share price and then multiplying that, which is correct. But like, you should be able to just take that monetary value and say it increased by X amount of percent. We had like said it was like 7,300% or something. So if we had done like 7,300% and just multiplied it by 100, you'd be 7,300. That's more accurate. You don't multiply, you add. Yeah. So 100 plus, maybe on the calculator you have to add. Let's do, see, but then it just gives you 7,100. That's not right either. This calculator is broken. It's not the calculator, it's user error, Booksy. No, it's not right. I know what I'm doing. Not a calculator issue, it's an operator error. It is right. Thank you. Well, let me try this. You're right. You wouldn't multiply by 1,000. You're right. 7,450. All right, there you go. Now it worked. But didn't I just do that though? Like, didn't I just tell you guys that it was my fault? It's not a calculator error. Not so much in the way that I was describing it at first. It's the way you type it in. It still worked if I did it, because in my brain I'm thinking like I need to take it to from a. I don't know how to just. Never mind. This is just gonna make me sound like I'm trying to make an excuse. So I'm just gonna stop. Like Jagged Flame, the way you're doing it is you're doing it with addition, which is fine. The way I was doing it with multiplication is also fine. You just have to. You can't leave it as a percentage. For some reason, I thought in my brain that the calculator was going to alter the percentage to a decimal for me, and it doesn't do that. So, yes, that the way I typed it in is wrong. It was my fault because I thought for some reason it was reading my mind. But you can do it with a percentage. You just have to make sure it's not a percentage when you multiply, which is what I did the second time. If you take 77,000%, that's 70. The reason it changes it to 70 is because it's moving the decimal place. So I'm not wrong. I just typed it in wrong. Like the way I was thinking about it in my head is I always go back to the decimals. Because when I do percentages of like the whole, it makes more sense to do, like if someone says like, hey, I invested $150 and I made 20%, what I like to do is do 1.2 because it just erases the need to add it back. So like instead of doing like 100 and let's just say you had $150 and you said you made 20%, some people will multiply it and get the 20% and then add it back to the original, but you can just do multiply by 1, which is 100, and then the extra 20%, but you do 1.2. This is a shorthand way of doing the same thing. Does that make sense? Ugh, so that's screwed up. So then you can quickly do the addition by removing the extra step. 120% is 1.2. So in my brain, I did it wrong. I typed it into the calculator wrong because I was assuming for some reason that it was going to convert the percentage for me, and it did not, and therefore it gave me some astronomically high number. So it sounds like I'm making an excuse, but it's because of the way like I typically do percentages. Because it's usually like I'm not usually thinking about things in terms of percentage. I'm thinking about things in terms of a multiple, which is multiplication. And you don't have to do the addition. Make sense? So the same thing would apply to 200%. So if you had like $150, you made 250%, you could just do multiply by 2.5. It's super simple. And it gives you that without having to do the percentages and then add it back to the original value. It adds the value back in automatically. And you're just using a single multiple to do it. You're not doing multiplication and then going back and adding it to the original value, which is what was done when I was corrected. By Ricky. Ricky, you corrected me, and you used the method where you did it even differently too, because you divided it and then multiplied it. You divided it by the share price and then multiplied it by the selling price. So it's like 3 different ways to do the same thing. It doesn't matter. I did it wrong. Anyways, if you invest $100, you're not going to get $700,000. If you invest $100, you'll get like $7,000, which is still ridiculously high. So so I should invest $10,000 is what you're saying. Yeah. And it would assume that it would have to work out. So yeah. It doesn't want to do it. It's not doing it right. Yeah. The calculator doesn't convert the percentage unless you put it in first. Then it converts it first to a decimal number, which is what I didn't do. If you put it in second, it just ignores the percentage sign for some reason. I don't know why it's doing that, but it just did. Or maybe it's not ignoring it, but it's actually multiplying by the final output, which is what you wanted to get, which I think is what Jagged Flame is saying. He's saying that, hey, you messed up because it's taking 7,000% and then multiplying that 7,000% back to 100. And that's correct. That's what it's doing. I just screwed up. I should have just thought about it in simpler terms like Ricky was doing. So I typed it in wrong, yes, because I was thinking it was going to do something that I do, but it doesn't do what I do. It does what is logical and it should do. You guys are like, I don't give a crap, Booksy. Just tell me the answer. Well, the answer is that number, if you invest $100, is basically what you get back. So you would get like $7,300 if you invested $100. Just on the basis of it being an even number, you can look at that as a percentage. It gets a little more complicated if you invest like an uneven number. No, it's not going to work, man. I'm telling you. Chico, I promise it's not working. It's not going to give you the right answer. If you do 100 times 20%, it's giving you 2,000. That's not right. So it should be 100 plus 20%, which is what Jagged Flame was saying, and that gives you 120. That's correct. So if you made 20% on a trade, that's what you would do. And I like to do it 100 times 1.2 just because in my brain I like to think 100 plus 20%. That's just how I think about it. I'm really not bad at math, guys, I promise. I don't think you guys think I'm bad at math. You just know that I screwed up the calculator, but I was doing calculus and junk, college calculus when I was in statistics when I was in high school. I loved math. I should have been a mathematician. Probably would have made a lot of money. And you guys are like, no, you wouldn't. You can't use a calculator, Booksy. You dummy. I make a massive calculator error. I typed it into the calculator, guys. The calculator was wrong. You cost our company $4 billion. You're fired. I'd be like, oh, well, all's well that ends well, I guess. I don't know. That's funny, dude. I don't think you should have been a mathematician. You can't use a calculator. I probably wouldn't have forgotten how to use a calculator if I was a mathematician. See, I don't know. Maybe there is difference in calculators. Maybe there is. Maybe I have no idea. I don't have another calculator on hand to check it, so maybe they're assuming that I don't know. I have no idea. I mean, you could probably they're functions, so mathematical functions. There's little computerized. I mean, they could program it to do it differently, I guess, but it doesn't really matter. The way I did it didn't make any sense. It was the wrong number, so that's really where we get the rubber meets the road, right? It's like that's not actually what you would make. So at the end of the day, it doesn't matter. I was wrong. Yeah. All right. Well, maybe AMC gets to 450 after all today. So I don't know why I said what I said on. I know that was dumb. I feel really stupid now. That's okay. That's life. I was just talking about this last night with my wife. I said, sometimes trying to be intelligent really backfires. People expect you to be smart. You do something really stupid. And you're like, yeah, well, maybe you shouldn't bank on that, I know. I'm so dumb. I'm sorry. Yeah, that's not right. You'd have to invest a pretty sizable sum to get to $1 million. I mean, we could probably figure it out backwards. Like it's just a function, right? But I don't want to screw with it. It's like you'd have to invest at least 10,000, right? Something like that, and then that would even get you $1 million. That would get you like 700,000. So, yeah, no, 10,000 will give you like 70,000 or something. I don't even know. I don't know. I'd have to look into it again. Now I'm like questioning myself all over again. Oh my gosh, Booksy, just stop. Well, if anyone wants to tell me what the number is, how do you get to $1 million on Doge? How much do you have to actually invest? Exactly $1 million right now. Go. Who wants to do the math? Because apparently my brain's not working right now. In order to get to exactly $1 million, how much do you have to invest right now? There's a lot of good math heads out there. One of you can do it probably faster than me right now because I'm apparently, again, my brain is fried. It's not working. I mean, that's a steep investment. Even like 10 grand or something in a singular stock. I'm sure you could do it if you're really wealthy. Probably not worry too much about it. For a lot of people, that's like your emergency fund, Gone. It'd be awesome if AMC ran and you got 10 grand and you could just dump it into Doge. 13,000. That's it. That's not a lot. I mean, that's a lot, but that's assuming that, yeah, I made the right moves and did everything. You weren't freaking out and trying to sell. Oh, there you go. Super simple. I like the way you think. I like the share method. On a normal day, that would have come to me like immediately. Thank you for simplifying it though. That's really obvious. Because yeah, if you had like $1 million and you divided it by whatever price you're going to sell for, I'm just going to say 10 because that's simple. And then exactly. The number of shares. You need 100,000 shares at 13 cents. Yeah, that's right. And then that's not correct. See, why did it do that? Why is it doing that? What's wrong with this calculator? Why in the heck did I do 100,000 instead of a million? Yeah, I did. Didn't do the right number. Oh my gosh, Booksy, you're driving me crazy, dude. Holy cow. Oh my goodness. It's like hurting my brain right now to be this stupid. That's not right. You need 95,000 shares? That can't be right. Yeah, that's right, because then you multiply by 10 to get that number. Multiply by the current price. So you need that many shares at 13 cents a share. Yeah, 13,000 was close enough. You probably just rounded differently. So you need $12,264. Yeah. 13,000 is close enough. $13,000 could turn into $1 million in a year. I mean, that's a really good investment for 1 year. If you're willing to buy $13,000 worth of one stock or one crypto. It would suck though if it didn't go your way. But I guess there's worse things in life. Well, I don't have $13,000 to spend on it. But even so, like just doing half of that, maybe possible. 6,500. That's not that bad. And even half of that, just to get 250,000, to pay off a house for most people. So 3,250, you could pay off a house. That's pretty impressive. Pretty impressive. Pepe is better for making more gains, or Peep, but the Shiba Inu chart really respects creeks. Check out SHIB. We looked at SHIB the other day. I'm not sure about SHIB. I had some issues with the setup. We looked at that, and it wasn't like bad. It just wasn't like awesome. I felt like there was an issue with it. Weekly creeks though. Okay. I'll have to check it out. I am interested. I wouldn't mind being like a good crypto trader, but I'm just not big into it, so I do like how regular the charts seem sometimes, which is nice. Well, that was the target for the S-curve on AMC. I think it's been met, so it hit it right there. I think it's close enough. We're going to have to see if it breaks that floor, 430 to 440. If it can break that floor, I think we'd be in good shape. We could see an advance to the 450s today. Otherwise, we could camp here. Technically, this wouldn't be a bad place, 425, if it wanted to hang out and just build a support. I wouldn't be upset about it on a Friday to build a support here. I'm a little nervous about that gap. And then GME really screwed us over. It went right backwards, so it really did like a fake on a fake. Yeah. So that stinks. It's like not committing it. So maybe it's like a double check, but it went down and broke and then it came right back up and broke back beneath. So there's a lot of volatility right now in GME today. For a Friday, this is quite a bit of volume and volatility here. We're going back and forth between creek to creek here, just kind of whipping around. So clearly somebody doesn't want this or that running into the money. It looks a little more like an LSPY now because of that push up with the drop, which is unfortunate. It just didn't hold. So that would mean it could potentially drop lower. I don't know, man. At this point, I don't really care. I'm not doing anything fancy with GME myself. I've got some long-term leaps, and some shares. I'm just kind of sitting. And I guess it doesn't matter too much. It'd be a better one to look at end of day and see what happens. Be really interested if MPW can get back to 5 this week. Be curious about that. Yeah. Anyways, all right, guys. I'm sorry about the math stuff. You think we're going to hit 469 before 2 p.m.? That's a good call out. I like that. That'd be crazy. I'm going to go ahead and head out. It's about my lunchtime and week's about done for me. I will do a recap. Said I was going to start doing those and try to do better recaps for everybody Mondays and stuff. Real quick, what is this that I'm hearing about? People have been talking about it the last couple of days about somebody getting banned. And I think it was somebody I know. And that people were coming in here because so-and-so got banned or had like a 60-day ban or something. Like, what is that about? Y'all know what I'm talking about? Was it, Johnny Wad asked if I think I'll hit the 298 gap first. I don't know. Anybody's guess is probably as good as mine in that case, but I think the way that I've seen it is that it's going to go up first and then come back down. I think it's going to go up to redistribute. It's going to go up to check the bigger creek. Maybe it's only 8 or 9, maybe it's 13, but I think it needs to go up first and then come back down. I know it's a huge swing, so maybe that's why it seems a little unbelievable. But it's just the way that I see it working out. If it only goes to 6 or 8, it may be more believable for a lot of folks because it doesn't feel like it's distributing when it only goes like part of the way. It looks a lot less volatile. If it only pops to 6 and we see that it's at 6 and it starts distributing, then yeah, we're not going 8 or 13 till probably late or probably early next year, because that would be a situation that I think we would take an early exit out of the range. That would be like a distribution at the top. It could be worse than that. It could not even go to 6 and then drop. But that's a very bearish situation. So, yeah, I mean, if it does that, it does that. We could have an election. That's kind of what happened in November of 2020. You had like an election and earnings pop, and then it dropped back down to fill. It actually already filled the gap by earnings and election, and then it had popped, and then it came back down for a spring. It's certainly not out of the question. The setup right now isn't really favoring that as much as it seems to be favoring a potential move high first, and I've talked about why I think that, but you guys are all all good. So your guesses often are going to be as good as mine in certain situations because the setup isn't complete yet. I mean, there's the nature of a range breakout depends on a couple things, and one of that is if you do get a spring that you have to come back above the floor. And I think, frankly, we need to get back above 440 and 460. So like there's two markers here that we haven't even jumped over yet. And then by that point you're like, well, it's already running. Not really. Like institutional traders will move it up to an SOS if they're ready to move it, and that can be a big buy-in, but a lot of times it's like that initial creek break that happens low is where you get the first big buy-in, and then the SOS is really the big one. It's the markup. And so for us, there's a lot of questions I have about maybe 550 because that's where a lot of people bought in back in May. And I'm just curious if there's going to be, if there was like a distribution, like I'd be most nervous that it happens like, if it were going to be an early distribution, then it happens like here or something. And like it sells off and just comes back down. We don't see this kind of move. We just see like a distributive move here, you know. And I'm not saying that's going to happen. I'm just saying like the nature of it is in question. Technically, could that happen? Yeah. And I talked a little bit about this a while back. I had like 6 scenarios that I was like running through my head, and I was like, this doesn't make more sense than this. I think it's possible that it goes really high and then drops down. A lot of people don't think that's possible. But the reason that I think that's possible is because of the nature of a lot of times these double flushes, they tend to go far because they're going to drop far. So if you were trying to get back down by like early January, if you're trying to get back down to like the 2s, or even just to test this floor again back low, you'd want to whip around whatever the liquid center is here. Maybe it's at 5 or whatever. So you could take a 50-50 around 5. And this is a very decent, simple way of getting a snapshot of possibility. And it looks like, oh, it goes up to 11. It could 50-50 pretty easily down through to 250 or whatever. That's not what a lot of people want to do, but that is what happened in 2020. It pushed up, and then it did a 50-50 down to the bottom, breaking the ice and all that jazz. So it's just a question of perspective. I don't think there's necessarily a 100% right answer. It's a question of like what path is taken here versus here, and I think there's a little bit of it just is. There's just gray there. It doesn't do the same thing every single time, and it depends on what happens up top. You know, there's areas that you could see a problem being a problem, and frankly, like if I looked at something like that and it pushed up and it distributed along 530 or 550, I'd be ticked off. I wouldn't be happy. I'd be really grumpy about it. But I don't know if there's anything else to be said about it other than, okay, I'd be grumpy and that's that. But if that's what happens, that's what happens, you know? The rest of it's just like, I mean, that's it. You know, it's like there's nothing really you can do if it doesn't advance. This kind of stuff is frustrating, but it's very much in line with what AMC has done in the past on the fake outs, where it goes and it advances over a creek and it camps there and distributes and then it drops. And I mean, we just talked about that. It happened in August of 2022. It sat there for a couple weeks and just looked like it was going to potentially move again, and then it distributed. So you got to look at those things in perspective and say, sure, it's possible that it doesn't actually make the move. I mean, last time we hit that 180 on the daily, it rejected up here. If it hit it again and rejected here, it could be like 650 and then it just rejects. Who's to say? Someone out there is going to get it right every time. My goal is to do as best I can to get it right every time, but it's not always going to be perfect. And sometimes what I see as a very strong likelihood, another person is going to look at it and say, I don't think that's as likely. That's the benefit of disagreements, right? Is that we don't agree, and therefore you get different perspectives. You're at a very good place if you're somebody that watches high quality TA and high quality analysis on something like YouTube. You're getting access to really, for the most part, you're getting access, not everybody, right? But for the most part, you're getting access to like pretty high quality ideas and due diligence that people have done. And you're getting to decide whether or not you agree with one person or the other. I don't see that as a negative at all, like that people disagree in that regard. I know that I think Nick P was thinking we only come up to 8s or something, and I can totally see it. Like I can see it visually right here. It's really similar, you know. And other people had talked about going to 20s. I don't see that. You know, there's like a lot of different opinions about it. Mine is based mostly on what's happened in the past in terms of like behavior for this stock, which is pattern analysis, and then also wave analysis. But the waves have places that could fail, and we've seen them fail before. They don't always succeed. So there's areas where like I'm like, yeah, this could be a problem. That's why I say that on the stream. So I'm trying to explain why, even though, yeah, I have opinions of what I think is likely going up here and what's likely coming back down, there's going to be a lot of disagreement about that, and I'm not necessarily like all against that disagreement. Like some of that disagreement is easy to understand. I totally get why people think it wouldn't do that. But there's a lot of good reasons it might not do that. I've been operating on the principle for a while now that this is an accumulation that's trying to build out into a secondary push to a phase B top on a macro range. But if I'm wrong, then it's could be very different. Like this could be a phase B kind of move that then goes down into a spring, but it doesn't actually make a new high. And this auto reaction is met by maybe a secondary auto reaction here and a secondary phase B top here, you know, and there's a distributive pattern in that because they're trying to just go back and retest a larger pattern bottom. It doesn't always have to look black and white. It doesn't always have to look like a perfect Y coffee and setup. This is the main reason why I think we're going to go back down right here. But beyond that, you know, it's speculative about how high it goes on a push. I'm of the belief that both 8 and 13 make more sense than 6. But if you needed to take the early route and you wanted to just pocket the move and not do it, yeah, I think you could instigate a lot of selling probably at 6. So it's challenging. Yeah. I don't really like 430, but I think it's okay. If it holds support, it holds support. So why do I not like 430 more than like the other two? It's because they're more definite. Like if you went down here to 4 and you closed at 4, if it hadn't come up first, which it did. So yesterday I was saying if it doesn't come up again, and it did come up again, if it didn't come up again and it went down to 4, I'd be pretty happy about that. Because I think that could be a really simple bottom setup, right? It's possible that that's still present, like a auto reaction and a phase B top. And I'm just overthinking that. I think it came too high by coming above 430 at this point. I feel like it's a little too high. It makes it feel more like a distribution if it comes back down. So yesterday, had this pushed up Wednesday, and then Thursday it chilled out and then started dropping today, I would have been fine with that at 4. If it pushed up, which it did, and it managed to get all the way to 450, that's back in the previous range. I also said I'd be pretty bullish about that. That's above this level that we need to get above 430 to 440. The issue is that being in the middle, you just is exactly what it sounds like. You're just kind of in the middle. You really don't know what to expect come Monday. Like if it built support here, would I be happy with that? Yeah. But frankly, who's to say that it can't upthrust and then drop back down if it just sat here? Like no one could really say that. You could be very bullish about the early outcome Monday, like it's probably going to head up if it holds support here. I think that's a given. Like it's probably going to try to make a push. but then you couldn't really be positive that it wouldn't just slide back through. If it went up to here and it chilled out and it ended up closing pretty high on the day to day, or if it went above even 450 and held, then we're talking about the breakouts. Like we're basically making new highs with new lows and so on and so forth. So it's not like it's contingent, it's if-then statements, So I think being in the pocket here at the end of the day, if we sat between the two and didn't go anywhere, I would be more bullish than bearish, but I would have to say that there's a open door there for like a potential up thrust because it just didn't check 440, for example. It didn't actually build a support above here, so that's question mark. There's a couple things I'm not questioning. Like, number one, I'm not questioning whether it's out of the creek anymore. I think it's out of the creek. I don't think that's a question in my brain anymore. I do not have any doubt that it jumped the creek, it jumped the horizontal support here. That's not a question. Those are positive statements. Like, it's definitely out. So those are check boxes that have been checked. I can't redraw this and keep fudging it. I think it's out. And I do think that, generally speaking, the reaction should be pretty strong back up to the 450 mark. And then you should have a pretty decent chance that you're going to build out a support at 434. That's where I stand right now. The fact that there's a tiny little gap does bother me a bit. Maybe it's met later. I don't know. It could be that situation. I don't know. But that's something that is just in the back of my head right now. It didn't quite fill that gap this morning. It's tiny. It's like a penny. But it matters, These things come back to haunt us a lot on AMC. They just do. Long term, hey, man, if we're going to come back down anyways, and that's what you think, Booksy, then who gives a crap? You're right. Long term, it may not matter if it doesn't fill right now. It may come right back down and fill later. I don't know. There's a lot of theories about how low it goes. Some people think 250 is too low. I don't know. It could be. I'm of the opinion that the setup as it is looks more bullish than bearish, which is good. I think we've gotten some confirmations, and then we're waiting on some others. So Casey Shaw got a job, and he hasn't been on for 3 days. So why did people say he was banned or something? He just got a job. Where can I learn this? Do you recommend any books? On wave analysis? No, I haven't read any books on wave analysis. I should, though. I'd probably learn a lot. If you are able to join the Discord, we have a little resources channel. There's like 3 or 4 free books on there. They're really basic. But there are some of those concepts talked about in those books. They're good. They're free. They're little ebooks. So he's on Twitch now. He just didn't like YouTube, I guess. It's fine. I got mixed feelings about YouTube as well. He did get shut down for 90 days. It was the music he plays and his intros. Oh. There's a lot of speculation out there. It's like he switched over to Twitch. It's good. I like Casey Shaw. I was on his channel. I was on his show once. He's a nice guy. At the time I was on there, he didn't really do a lot of TA because he was asking a lot of questions about it. And I got a lot of negativity when I was on his show. Not everybody. Some people were really nice, but like a lot of people were like, yeah, this is bogus, I don't know if he's changed. He's probably done a lot of TA since then. I think it was an interesting experience. He said it was very, for him anyways, he said it was kind of a little bit of an eye opener. I'm not quoting him. I'm just saying that was the impression I got because he was like, oh, okay, there is, ways of doing TA on there. But a lot of the people that were on that show were in the chat were not really into it. They were very critical of what I was doing. And to be fair, I mean, it was a while ago, so it may be that I was doing stuff a little differently than I do now. But I believe in change. I believe that people, even if they're doing their best, can do better. So that's how I was back then. Like, probably doing my best I could, but I could have improved, and I think I have improved. And I think even now, like, I'm doing the best I can do, but I can do better, and I will do better one day, and I'm just going to keep going and getting better. I said it like 2 years ago when I started doing YouTube stuff that I felt like there was two paths before me. That one path was that I don't bother and I just kind of sit on it. Like a lot of people don't want to deal with the chart. So and especially with stuff like AMC, because they bought in on a pretense that this was going to have this MOAS one day. And so there's no need to chart it because it doesn't matter. I'm just going to sit on it anyways. That's really more of a personal opinion than it is an opinion about TA. And then there's folks that are like, no, I kind of want to trade it short term as well. Or I want to know if there's big swings coming in so I can make some of my money back. And that's kind of where I was. I was like, I just want to trade it. I have shares. I just sit on them, average down, and then I want to trade it with options. And that's different, right? And so I made a decision, a personal decision, that I was going to spend the time that I have, because I want to do it, to go on an educational journey. Some like mystical nonsense. No, like just to go on an educational journey for myself. Like that I could spend the time, if I want to, learning it. I don't have to. I can do it if I want to. And if I want to do it, then I'll have to commit a lot of time to it, and it's going to take a lot of time. And so I decided that at that point, I was going to build out my channel and let it be what it is and see if people are interested in following along. And during that whole scope of thing, I've gone and I've talked to a lot of different people who've run different channels, and there's a lot of different belief systems out there within the market about what's most important, what's not important. And what's interesting is kind of like, I think for a lot of people who maybe are on the sidelines, there's a systematic ignorance that's going on. And I don't mean that in like a really mean way. I just mean like there's a willful kind of desire that people don't change and that everything's kind of the same. That's not really how I feel about it. And people that have been with me for like a year or more know that, yeah, I've kind of changed my opinions about certain things and like the way that the market is run and the way that because I've learned more, but also the way that I do TA has changed as well. So back when I was on like Casey Shaw, I think I was doing okay, but it wasn't like exactly what I'm doing now. So it's a little strange because I think people kind of put you in a pigeonhole and they're like, oh, you do this, so that's what you're going to do forever. And it's like, no, that's not really what I'm doing. I'm doing a lot of different stuff, and I'm trying my best to get better and get rid of the stuff that doesn't work, that hasn't really been successful. So that was the last time I was on Casey Shaw's channel, and I think we had connected on something else and then just really haven't talked since then. So yeah, I don't know what he's doing. He may have really changed a lot. He may be doing different things. Yeah, we checked out Doge a little while ago. I was a whole calculator debate. Dave. It is breaking out. It looks good. I think it could go to like 16 or 17 before it like maybe gets stumped. We'll see. So, yeah. Anywho, yeah. So this has been a really weird kind of, I don't know, YouTube story for me. And it got to the point where I was able to do a lot of things with that. And I'm doing the membership stuff now, as you guys know. And I'm using that as best I can to do good elsewhere. Part of that is just my own personal desire to make an impact and do things that are good, and not, impacts that are bad. And just within my realm, social circles, like there's things that I can do, and I want to do those things, and we'll see how they go. I'm really happy to say that the stuff that I was doing, people really like it. So I've had the opportunity to speak with a lot of folks about some of the artwork that I was doing for the martial arts stuff, and really positive. I've got like 2 or 3 orders. I think I have 4 orders right now, which is kind of crazy, for those art prints, and all that stuff is going to go back to helping sponsor whoever. It's anonymous, so it doesn't. I'm not going to know the person necessarily, but to sponsor a kiddo who's unable to afford the martial arts program, and I think it's good, And so like that kind of stuff is very affirming because you work hard to do things, and then sometimes you don't see the results. I don't think that the YouTube stuff's going to necessarily pay off that way. We will see. We will see. So far, membership is pretty low, and it's not going to last more than like a month. So I have a couple guys who gift memberships a lot, and they're really awesome about that. But it's challenging. I think people see it as like a money grab scheme. They don't really understand it. They're like, why would I contribute if I can get it for free? Some people say, well, I'm going to do it, but when maybe later down the road when I'm making more money, it's like, it is what it is, I don't think it's going to ever be easy. So I don't know. That may not work out. And if it doesn't work out, I'll just stop doing it. And frankly, on YouTube, like I've kind of lost most of my audience anyways. So I don't want to be like negative about it, but I used to do videos more regularly, and I had a pretty strong audience. And I would get like, just being candid with you, I would get like a few thousand hits per video. Nowadays, it's more like 700 or 800. So I think a lot of that is just because the AMC community is tired and probably don't understand, like, again, that like I've changed, like the stuff isn't exactly the same. So they're like, oh, he's still beating the same drum. That's not successful. It's not unsuccessful, but it's not successful as a lot of YouTubers go. So I think there's probably some personalities out there that do really well and have done better. And they're kind of like the hot topic of the day or whatever. And that's cool, man. I'm like totally fine with that. I really don't think much about it most of the time. And I know Casey Shaw is pretty popular, so that's why I was asking, because like people were saying they were coming in because Casey Shaw was shut down. I don't know if that's true though. I've seen a couple new people, but I haven't really seen a lot of change in the numbers, so I'm not positive that's actually true. That's why I was asking about it. I like him. I like his stuff. You think about all the time. I talk about it maybe every other day or two because I care about. It's not possible to not think about it. Like, you're not wrong. Because if I care about what I'm trying to do with the martial arts sponsorship thing, and if I'm tying that somehow into the YouTube stuff, even though it seems irrelevant, it seems like it's not relevant at all. If I tie that into what I'm doing here, then it's something that becomes important. So I'm investing in it. I have to think about it. Because then it's like, well, it doesn't work, then I'm not going to be able to use that. So if for example, this channel went to dust, and it could happen pretty quickly. If this channel went to dust, then I can't use that for this other thing that I'm doing as like a charity. Then it's that's a big deal to me. Like, then I have to find another way, to move forward. So it's an experiment. And yeah. So, I mean, what I meant is, like, I don't think about it in like negative terms. Like, it just is what it is. That's what I'm trying to say. So I should rephrase. I do think about it, but I don't think about it in terms of like success and failure. I just think about it in terms of, okay, if it doesn't work, here's what I'm going to have to do, right? And guys, it happened earlier. I got a job earlier this year. It didn't work out, but I got a job earlier this year, and it was partially because I felt like the YouTube stuff was not really where I needed to be at that time. And it changed my mind about a lot of things going through that experience, but it made me realize I do value autonomy a lot, and I value freelancing. I missed doing the artwork stuff. I kind of missed doing a lot of the streaming stuff, so it was a good experience to try something and have it not work out. So here I am. But yeah, I mean, if this doesn't work out, this doesn't work out. How long do I keep going if we have some kind of falling out and people don't want to watch Booksy anymore? Then we're just done. I don't know. I just move on to other things, I guess. I got to have other stuff going on. I'm done talking, though. I was going to mention that the Doge stuff, we were talking about that earlier. I messed up on the numbers, but it is really strong. It looks really good. I wanted to do a quick recap. I'm not convinced IWM's not going to come down again. The small cap, Russell 2K. Mild loss on the day so far. Could break out. It is a bit of a narrowing here. That would be a fairly common SOS with the narrowing higher lows as you go. But there's still a gap below down to like 223, and I think that the creek jack could come pretty low as well. Like come all the way back down to like the 220s, and it would be fine. It wouldn't be bad. It hasn't pushed over the top yet, so technically, like to some degree, like the buying climax is over here, and therefore, again, technically, like this could be thought of as not an SOS. I think about it as one because it's pushed above 225. We've not traded above that. So I still think it's a sign of strength to some degree that we're trading above 225. But yeah, there could be a backup to a creek. AMC and GME we've talked about a lot today. We'll see. If they end up at 450, it's a game changer, I think. If we still kind of chill out here in the middle by the end of the day, we'll see what happens. I'll recap it. I do want to do a recap for Sunday, maybe a shorter one. And then GME is really kind of ugly to me today. It's not really been doing very well in terms of these up thrusts with sell-offs. That could change pretty rapidly if you get like a higher low here and then advance beyond. I marked it off. It's like a flag. So there's a 24-degree angle on my chart. It's probably different on different charts. But it's basically like this top and bottom match. And you can see that channel right there. And that could be a flag that breaks out. So even though this walked down and it broke through the trend going up, and it did, that flag could cause a rebound. And if it leaps up to like 22, that's above that wall. So it's above the creek. I'm a little concerned right now because it's not making... It looks more like an advancement. You can see on the bear side, this is upside down. And that makes me a little nervous. So it needs to come back through 2145 again. Maybe 2150 is a better number to mark off. I'm going to put alerts on my screen for myself because I'm curious if it comes back above there. Did not spend a lot of time talking about MPW. There's not much to talk about, not yet. Right now, it looks like it's generating kind of a hook. It's starting to look a little like a head and shoulder, which is a bummer. I hope it doesn't capitulate and come all the way back down to 440s. But this is where they like it, and this is where bulls have been pulling it back to frequently over the last 6 months since like April. I think that there's a decent chance that it's going to bottom here and rip really hard back to 8, but I'm going to leave it at that for now. For now, it's back beneath the creek. It didn't completely break out, pushed the resistance, and then came back down. So it needs to hold. I'm talking about the big one, the big downtrend on the widening, and it is massive. And if it breaks out of that, it should have a target up near the 20s, which is a huge deal. But short term, I'm really just looking for a move back up to here, maybe $7 to $8, and that's about it short term. So for now, that's where I'm going to leave it. I don't want to talk about that anymore. It's not a sour subject. It's just something that I just don't want to spend a lot of time on right this second. I think it's still a potentially really good trade, but there's some things that need to happen to get back in the game here. In long term, this might be just some kind of a fear tactic sell-off. So we'll see. All right, I'm heading out. You guys have a great weekend. Appreciate you hanging out. If you're new, welcome. Next time I come on, I'll try to make sure I post stuff for like Discord links or whatever if people want to join. You have to get an invite directly from me to just avoid bots and junk getting the link. I'll go through that next time if you guys are still around come Monday. And for the rest of you guys, you're the real heroes, sticking it out day in and day out. So appreciate you. And I appreciate those that have given to the channel, those that have signed up for membership to give to the Taekwondo stuff. Appreciate that as well. I hope you guys have a great weekend. Enjoy the fall weather. And we will talk to you later.